All right, we are recording, and let's see, we're going live. It's gonna take us a second. All right, I think we're going live here. We're going live on Zoom. Looks like it's connecting up. So for those of you who are joining us on Facebook, give us a second. We're connecting up live on Zoom. This is Stephen Palmieri, and I am here with the one and only Matt Hearn with ACAM, which is a industry trade association covering credit, debt, and you do tax resolution stuff as well, don't you, Matt? A little bit, no? Everything. So, man, we're coming here today. You guys might need to jump in the ring because this could be Matt and I. We're gonna be duking it out. We're gonna be talking about the telemarketing sales rule, but Matt and I we get along really well, man. So this is gonna be a good show. Thank you guys for joining us. I see we are live, so go ahead and if you have questions, put your questions down below. And so we're live in the group, guys. So, man, let's go and get this thing started. So, Matt, I guess we originally connected up about a year ago or so, and we kind of hit it off pretty good from the onset. And you've got an interesting story, and you've got ACAM, which is OCCAM, which we'll let you talk about here in a second, which is a trade association. And, I've been a member of NACSO, which is a trade association. And, NACSO just sued a federal regulator. I know you've kind of got some differing opinions on that and everything, but at the end of the day, it's all our industry, right? And that's really where I think it's important that, that we do get together. We do have conversations. Like Alexa, hey, how you doing, Alexa? That we do have conversations, right? And we bring people together because, at the end of the day, it's like people can say things like, well, this lawsuit just screwed us all over or whatever. I didn't have any say-so in it. And the reality is that the telemarketing sales rule has been around for 25 some odd years, unchallenged essentially by our industry. You've got credit repair companies that are part of NACSO paying dues. They have a lobbyist. And you know what? They filed suit. The question is like, wouldn't you do the same if you had that opportunity, right? That's my question to the folks listening. And for the people who are like, they screwed up for all of us. Well, basically the way the regulators look at it is, if you've got an internet these days, if you catch leads from the internet and you make multiple phone calls and campaigns, as far as the regulators look at it, you're telemarketing, right? So I think if we can kind of start our conversation, kind of from that framework of like, no matter what people think about the deal, like at the end of the day, if you have an internet presence, for the most part, the regulators believe you're operating outside of compliance, and so from that perspective, how do we take back control of our industry? How do we fight back against, kind of rogue rules and potentially laws and things like that? And so that's kind of the framework, man. So tell us a little bit about you, your background, ACAM, and then, man, let's kind of dive in on the meat and potatoes of this bad boy, Matt.
Sounds right. So I got into the space early 2000s, involved primarily in the settlement space. Worked really hard there. I'm going to give you the abridged version here. Most people, if they want to know about me or want to see what I've done, they can go to waymaker360.com. It's got all my social media and all the things you can kind of connect. But for the most part, I'll just do this so we can get to the meat and potatoes of this thing, right? I've been in the space a really long time. I've watched the formation of the trade groups. I've watched their efforts. I've seen what they've done. I've seen the split. I've seen different verticals working together. I've got a lot of connections with regulators, have a lot of great conversations there. I host major national events for the entire debt relief space in the RevCon product. And I'll just say this has been a long time coming. The telemarketing, and I'm going to just go right into this telemarketing sales rule because I know you want to do it. So in the 90s,
you've been itching all weekend for the Zoom, huh? It's like you got mentally prepared.
So hard to get people to understand this. Now, as far as credit repair is concerned, I have zero skin in the game. Zero. It doesn't matter to me whether the industry folds or makes it. It doesn't matter. I'm the primary cheerleader for this space. I want to see these guys win. But looking at these other regulated verticals within the space that we have fought really hard to solidify, I've seen this warfare. I've seen exactly how these rules and regulations are coming down. I see exactly why they are coming down. I see why the regulators get heavy-handed. I've seen complete lack of leadership in all of the spaces for that matter. Aside from 2004, USOBA did a really good job of being that trade group that was consumer focused and advocating for consumers and advocating for compliance and working with regulators, lobbying regulators in a more grassroots format. They didn't spend tons and tons of money on lobbyists. They went feet on the ground, boots on the street, and worked with regulators, the guys that really need a fundamental understanding of what these products are so that they can appropriately adjust the laws, right? But in the mid 90s, when the telemarketing sales rule went into play, I was working in the direct sales industry. So I had a big company in that space. I've been working as a consultant for a lot of big companies in direct sales. And at that point, what was happening is we were seeing the internet really start to take over in regards to how people communicated. And the telemarketing companies that were out there, and I had one. I had a telemarketing arm on my direct sales company, and we had to subscribe to the SANS list. We had to scrub our data to make sure we weren't calling anyone on the do not call list. That was the big kicker there. And because of the onset of this technology, we were seeing people utilizing technology to spoof their IDs, their numbers, their locations. I mean, all of that was starting to happen, and the technology continued to integrate more and more with the internet. So it became this situation where you have all these telemarketing companies selling a variety of different products. I mean, you can, in direct sales, you can pretty well name it, whether it's all the way down to from Kirby vacuums all the way up to advanced medical filtration technologies and things like that. And it was off the rails. I mean, these guys were calling from call centers, spoofing their information, selling products, taking consumer money, not providing service or products, and it got rogue. So the telemarketing sales rule was the vehicle for the government or the regulators to step in and say, okay, we've got to clean this up because consumers are being harmed, they're getting ripped off, all of this is happening. Let's enact the telemarketing sales rule, and let's just put some framework around this thing.
So let me not to cut your train of thought, but let me, for our listeners there, let me put some context around that to help folks understand. So about a year or two before the telemarketing sales rule was passed, there was a law that Congress passed, the Telemarketing Sales Act, or whatever it's called, something like that. So Congress actually passed a law, the Telemarketing Sales Act, I think is what it's called. So it's a law that Congress, which is the law-making body of the three branches of government, they passed this law, which was designed to kind of create this framework for telemarketing. And within that law, Congress authorized the Federal Trade Commission as a regulator, which is actually under the executive branch. They work under the president. They're supposed to faithfully execute laws and defend the government's position. So Congress authorized, when they passed the law, the Federal Trade Commission as a regulator to further interpret and regulate the law. So that's where then the telemarketing sales rule, so it's called a rule, was basically created by the executive agency, the Federal Trade Commission, where they're like, okay, you know what, we were given however broad sweeping authority by Congress to interpret this thing, and we're gonna just do what we do as regulators until somebody challenges us, right? I mean, that's kind of what the way it kind of really works, whether it's constitutional or not, or outside the scope of the limitations. And so a year or two or so later, after the law was passed, the Federal Trade Commission passed the telemarketing sales rule, which was basically designed to further interpret, if you would, the framework of the law. And in that, they were like, okay, well, there's this credit repair industry, which at this time was not there. The Credit Repair Organizations Act was not passed until the following year. So the credit repair industry was not, had no framework, congressional framework to regulate it. So they were like, I guess they were getting all these complaints or whatever from consumers, from credit repair companies, getting ripped off and stuff. I think it's important that we do understand there's obviously a reason why we got lumped into there.
Yes.
So there's a telemarketing rule that they're passing. They're like, okay, we're going to try to beat back this credit repair industry. And so with that context, so people understand it's not a law.
So
it's a rule.
That's one interesting angle. I think that's an interesting angle, and a lot of people buy into that idea. But the telemarketing sales rule amendment in 2010 is really the clincher that sort of absorbed these fringe verticals of financial services and said, these guys are rogue and they're using a lot of different technologies to market their products. And so, debt settlement was the primary tip of the spear involved there. But because the debt settlement companies were working with credit repair organizations, a lot of them were offering credit repair services after the settlement side. That's when things really, they said, look, we've got to amend this so that we can encompass the proper protections for these financial services verticals. And it was, settlement, it was tax resolution, it was the student loan stuff, it was
because debt settlement, right? Like debt settlement has its own carve out in the telemarketing sales rule in addition to credit repair, correct? And I know you come from a debt settlement space, so both of those were carved out in there specifically, like with things that are not just to all the other industries. Is that
so we have to ask the question, why? Why were those specific fringe verticals targeted specifically in that telesales rule amendment? And why were they locked down so hard? I mean, the exemptions even were extremely difficult. The only reason why the existing exemption to the telesales rule amendment exists is because of the direct sales industry and the initial formation of the TSR. Allowing them the ability to do direct sales, which means you're telemarketing on one hand, but you're following up with a meeting with a representative of your firm face-to-face. And when that consummation happens face-to-face, it nullifies the telemarketing sales rule in its play, because you're not using the phone to consummate a sale. There's not a double-blind scenario happening. You have to have a meeting with a sales agent who will then go through a comprehensive sales pitch, really, and consummate that sale in the house or in a convenient location for the two parties to meet face to face. But the key was that the representative of the firm was going to meet with that actual consumer prior to consummation and collection of any funds. So it protects the consumer by revealing the identity and creating a transparent environment for those direct sales companies. And that's, one of the things that was fought through in the 90s when the TSR was originally enacted. They said, look, what about us direct sales guys? Yeah, we use a phone, but we're also using the phone only to set appointments, so that's not really telemarketing. Telemarketing would be, I'm calling you, you're buying a product, you're paying me over the phone. We never see each other. We don't know each other. I can be as opaque as I possibly want, and I can give you the information I want you to have to entice you to make that deal.
Let's pause again real quick on that. You mentioned something really interesting. So you had mentioned, we're not calling you and enticing you to pay over the phone, right? Which is really the original spirit of the telemarketing sales rule, which is Matt Hearn calls Steve, and I'm just sitting here in front of my pool table, and I'm just kind of unsophisticated. Matt's like a boiler room type, amazing salesperson, and he catches me on the phone, and I'm just dripping off of every word that he says, and Matt's like, but if you don't buy right now, I'm sorry, but the deal's over. So go ahead and pull out your credit card. Let's consummate this sale on the phone right now. And Steve and I'm like, the fear of loss. Look at my COVID hair, by the way, man. I need to get me a haircut. Yeah, you don't even have COVID hair. But I'm like, so Steve and consumer is like, the fear of loss is greater than anything else. And I don't want to lose a deal because Matt's such an amazing salesperson. So I'll pull up my credit card. I consummate the deal on the phone, right? So I think that's important. You kind of just glossed over it, but I think it's important because, not to fast forward all the way to where we are today, but I think context and where we are now matters, to where essentially this the regulators' interpretation, and I think certain court cases have led to this, where basically internet marketing, essentially, like the internet is considered a telephone, essentially, which really is outside of the entire spirit of the telemarketing sales law and the telemarketing sales rule, everything. But anyway, not to cut you off, but I wanted to kind of tie it there, because that's why we actually have this, I don't like to use the word problem, but we have this situation we're in, is because, if you've got an internet and you're capturing leads through this internet and then you're calling them or whatever, and then if they go and they purchase something on your website, like, you know what I mean? That is now considered like potentially telemarketing, right? So it's become such a broad and sweeping interpretation, well outside of the problem that Congress was trying to rein in back in the mid-90s when they created the law, and then when the FTC created the rules. So go ahead, man. I just wanted to kind of touch on that.
That's a good way to look at it. And I think once the internet began to merge with, we'll call it the telephonic communications network systems, then the FTC had to decide, and the government had to decide, whether or not we're going to try to regulate this thing electronically, or whether or not we can say, because the internet runs over existing communication infrastructure, then that would also be included. But when you think about why wouldn't they then find, because we're in a whole new era now, right? Technology is a thing. Most people communicate like we are right now via Zoom or otherwise. Why have we not found and created some new rules around that? And I think the answer, this is just my opinion, I think the answer is we'll call it the electronic economic infrastructure that's out there, these huge tech giants. They're not going to sit back and be regulated because of a series of rogue operators that happen to be using the same technology. And those are the ones that would be addressed in any kind of an electronic, telesales rule, if you will, right? If they were going to try to say, look, now we're going to regulate how we do commerce over the internet. It's a much more difficult proposition, and there's a lot bigger players that use that same infrastructure correctly and compliantly. And so for a small series of fringe groups that are causing a problem, they have to look at what's the best instrument for executing regulation, right? And in this case, I think they nailed it. I mean, they really, really nailed it. When 2010, when that amendment was enacted, we knew it was going to take down a huge chunk of the industry. And that was just a reality, because at the end of the day, this is what we're talking about, right? The meat and potatoes of this thing. You can't collect a payment, let's say in settlement, you can't collect a payment until you've got a settlement in place, you've escrowed funds appropriately in a third party, FDIC insured SPA type account that's neutral and third party. And unless that consumer initiates that transaction and says, I accept that settlement, and the payment is made on that debt, then the settlement company can collect a fee based proportionately on the amount of the debt that was settled in that one transaction. So for settlement, they thought the same thing. Who can survive 6 to 9 months of no payment while we're doing all of this work and we're running all this infrastructure? There's no way that this can work. So in 2011, we had till the end of 2011 to comply. So they gave you a 1 year from the time they placed that thing in motion to get into compliance with this rule before the enforcement was coming. And so we had 1 year to figure it out. And so we held an event called Evolution 2011. And the goal was to help these guys bridge the gap between collecting a fee now and having our models based on the idea that revenue coming in today is the only thing that we're going to keep us alive, to now I can't collect a fee for maybe 6 to 9 months, right? So that means undercapitalized companies were going to really struggle if they even made it at all. Finding your way to that place was really difficult. And so the proposition that we made there was, you've got 1 year. Let's start with month by month. And in month one, you're going to put away 20% of your client enrollments into a no advance fee product. And you're going to play that out. 80% will go into an advance fee now because it was still legal. And then next month, you're going to go to 30%. Then you're going to go to 40%, 50%. And you're going to kind of bridge that with an arc over time, so that by the time that law was official and you had to be in compliance, you now had 90% of the clients that you've enrolled in that last year in a no advance fee product. And ironically, I would say 25%, 30% of the industry made it. The rest of them just couldn't pull it off.
Yeah. So let's touch on that again. So just to be clear again, so debt settlement and credit repair, they're two separate things under the telemarketing sales rule and under state laws, and I guess federal laws too. I mean, I don't think there's really a federal law for debt settlement, but there's state laws. So let's back up for a second. So back around 2010 or go ahead.
There are some. The federal laws are the FTC and CFPB's enforcement on
not like
existing.
the deceptive.
Yeah, there's not like a specific debt settlement CROA.
Yeah. So for kind of the time period around 2010ish or so, so the debt settlement industry, you can correct me if I'm wrong. I know that's really your arena. I had a debt settlement license in Texas for 2 years, and I let it go. I just wasn't doing much of it. So I am, I think familiar enough with it. I did almost no business, and it wasn't worth it. But around 2010 or so, the time period you're talking about on the debt settlement side, the industry created basically a Uniform Debt Settlement Act, which is basically they created kind of like the Uniform Commercial Code was created by the commerce industry. These industries get together and create what they would like to be a law. So they created the Uniform Debt Settlement Act, and they lobbied, or all the states basically ended up enacting this as state law. So around that period, you've got state laws that were passed around a framework created by the debt settlement industry. So debt settlement then did actually become regulated by the states around 2010, 11, 12-ish. in much the same way that credit repair was regulated in 1997, a year after Crow was passed, which was in 1996, the following year, almost all of the states passed credit services organizations laws. Now, the difference there, the credit repair industry, we did not have like a uniform act that we had created. We were behind the eight ball the entire time, right? We had, telemarketing sales rule. Then we had CROA getting passed in 1996, which our industry had really very little say so in. And then the year after that, all these states enacted the state versions of it. So I think it's interesting just to point that out to where, okay, you've got state laws on credit repair mostly passed in 2000 or 1997. And then in the 2010, 11, 12-ish area, you've got all the debt settlement state laws that were passed. And then you've still got this telemarketing sales rule, which is this federal executive non-law rule. And, so all those things being said, you've got now the CFPB, it used to be the FTC, which was primarily enforcing it. They were the ones that created the rule. You now have the CFPB essentially. So I guess to kind of take us to where we are, right? I mean, so we've got state laws and federal laws regulating these industries, but we've still kind of got this overreaching rule. And we've now got a regulator, the CFPB, who's going out and they're using this rule. Okay, even the FTC, I mean, they may have used it once or twice when they went in, but I know folks who have had really big credit repair businesses that were under investigations by the FTC and, for charging advance fees and stuff like that, for violations of CROA. And FTC never even accused them of violating telemarketing sales rule. Like I personally know folks, who've had businesses, credit repair businesses, investigated by the FTC, and their own rule was never even part of the complaint. And so now fast forward, we've got the CFPB taking over, or attempting to take over. No, not attempting. I mean, they basically are taking over, kind of to beat everybody up with a big stick. And they're pulling out all the stops. So they're like, oh, well, we've got this old ass rule, which is really overreaching and everything. And we're going to obviously throw the kitchen sink at these companies we're trying to enforce. Because of course, that's what, not just regulators, but when somebody gets sued, you're going to throw everything at them, of course. I mean, that's kind of how the game is played. But that's kind of part of the irony from my perspective is that, like the FTC, I mean, for 20 some odd years, didn't really even use this in their enforcement actions. And now you've got the CFPB time and time again, and they're like, no, this thing holds the weight of law, and you guys are acting unlawfully. And in fact, your whole industry now is operating unlawfully because you all have websites where you capture leads. And my understanding is that, they're trying to get the precedent where they can go for the merchant service companies and say, you guys are doing merchant services for credit repairs who are charging illegally. And I know you've mentioned previously Operation Choke Point, which for those folks listening, I mean, it's not a new thing that the regulators try to get the merchant service companies to not like credit repair. There was this Operation Choke Point about, maybe 7, 8, 10 years ago or something, where basically the regulators, I think it was FTC or some regulator went in and was like, basically credit repair is high risk, and you guys, all these merchant service companies basically stopped working with credit repair companies. And then it was a big deal. And, now we've got high risk merchant service companies who will underwrite for credit repair, but you've got to have a reserve, you've got to have high fees and everything. So it's not the first time that a regulator has gone in and tried to cut off the cash flow for our industry, but it's the first time, and from my perspective, we've got a regulator who I think is really trying to, again, my opinion is that I think they really are trying to sever the beast of the head of the beast for our industry. Just my personal feeling on the matter. But
no, you're not necessarily
on that.
You're not necessarily incorrect there. That's really a smart move. I mean, half of the problem I think that we have in this space, number one, is that we don't see things in this industry the way that the regulators do. We don't see it from their perspective because we refuse to look at it from their perspective, right? As a regulating entity that's designed to protect consumers from these types of abuses, right? The CFPB, the Consumer Financial Protection Bureau, the Federal Trade Commission has a huge volley of industries that they have to enforce, regulate, and otherwise, right? So they're watching all of these big players. and determining whether or not consumer harm is imminent or whether or not it's something they need to keep an eye on. But the Consumer Financial Protection Bureau was put into place primarily for enforcement on these fringe financial services products, things that you don't necessarily need a license for because there's no necessarily rules and regulations designed specifically to regulate those types of fringe verticals, but like settlement, student loan relief, credit repair, whatever. So how do you regulate those guys when you've got, let's say, 10,000 businesses out there operating under radar and operating completely rogue, and you're seeing consumer harm, you're seeing consumer complaints, and you can't possibly go after every one of those individual 10,000 guys. So how do you get them? How do you rein them in, right? You go after the place that they get their lifeblood, right? Which is through the banking systems, the merchant processors. So if they can choke those guys out and say, look, as a bank, you have to know your customer. That's a law. You have to know who they are. You have to vet them properly, and you're culpable for any material breach in rules that these guys are doing. You know, you're basically aiding and abetting, if you will, if you're facilitating their ability to fraud or perpetrate fraud against consumers, right? So you choke out the bank or the merchant service, number one, you got a couple things that can happen. One, you're going to slow that down really quickly, and a lot of the loose guys are just going to fall off because they are not getting paid for a series of months while the investigations are ongoing or whatever. The other side of that is that they can literally purge or request all of that data from those banks that are processing for these companies and identify all of the targets, right? So as a regulator, it's a smart move. It's like, well, we can't get all these guys, so how about instead we choke out their lifeblood and we get the information we're looking for so that we can control this rogue behavior and protect consumers, right? So it's smart on their behalf, but we also need to understand why they feel that way, right? A lot of people have this idea that like the government hates credit repair. They think it's all a scam. That's a very common conversation on these threads is like, the government's never going to let us survive because they believe credit repair is a scam, right? Why do they think that way? I mean, who's really looking at why do they feel that way? Because once you start digging into that and you see how they're seeing it, it comes down to two issues. One, either A, they're right, and this is something that needs to go away because we've drank the Kool-Aid and everybody believes this is a thing and should be a thing. And it's because we're so deeply invested in our businesses and in creating these models around this credit repair business, right? Or it's legitimate and we need a lot more education on the other side. We have to help them understand what it is that we do. And I had this conversation, I had a meeting with 12 CFPB attorneys, the entire spread of them that work in this industry primarily. They regulate and enforce all these verticals. And I had a 3-hour meeting with them, and they asked probably some of the most basic questions. I mean, how does debt settlement work? How does credit repair work? Why is this a thing? You know, and these are fundamental questions. So them not understanding how these businesses work tells me that they're only addressing the issues that they're seeing come out of this model, and they don't have a fundamental understanding of why it exists, right? Because in business and markets, how it works is if there's a need, you can create a solution. You can move in on the private sector and you can create these solution models to address a specific need, right? And if there's a lot of money there, everybody's going to do it. It's going to blow up. Yeah. So they don't understand what the need was, right? So you guys understand that the credit system is flawed. It's got a lot of problems. There's a lot of inherent and inaccurate information being posted to bureaus, which is, you know, we call it harming the consumers on our side. We come in and say, well, we're going to fix this. And we're going to go to battle for these guys. No different than settlement, right? When customers are trying to get it, you know, work a deal with the creditors, they're like, yeah, no, you don't get a deal. Sorry, that's just not how it's going to be. We'll just sue you, right? Well, now you need some firepower. So settlement guys come in and go, oh yeah, we negotiate that stuff. I know exactly how to deal with these guys. They're just collectors. They're, you know, the creditors have their own systems of how they liquidate debt and continue to keep that stuff revolving. So they came in and created models to say, well, we're going to be a shield between the consumer and the creditor, and we're going to get deals for them, right?
Yeah.
So that's where these things are starting to happen. And when you start to educate them about why these things exist, then they start to understand it. But as it is right now, here's what they're seeing. Okay, you guys are going to hate me for this, but this is not me. I'm just the messenger, right? The government says this. So there's a credit reporting system. you're responsible to pay your bills. You're responsible to pay them on time. If you want to build your credit and you want to earn, more credit and have more available opportunity for, lending products, well, then show us that you're going to pay your bills, right? So the credit scoring systems go into play, and everything you pay on primarily in an unsecured arena is getting reported to that bureau. And the lenders are using that to determine whether or not you're lendable, right? So Steve Palmieri, you want to borrow $50,000 from me? I want to know how I can be sure that you're not a risk to me, that you're not just going to take my money. You've got a history of taking money and not paying it back. That's going to be a problem. Or you're paying money back, but you're not paying it back on time, and you're kind of being a pain in my butt. I believed in you. I gave you the money, and now you're not paying me, right? So how do we solve that? Well, we create a credit scoring model, right? And it'll show this credit history through time, and it will give them an algorithm and an opportunity to see how you've paid bills in the past, right? So they can do this. Well, we know that errors happen, identity theft happens, things go wrong, and the consumer now has a tool to go in and deal with that credit bureau and say, look, that's not right, this one's not right, I need that removed, I need you to verify this or verify that. Those tools are available on the system, right? But we're not seeing results. So consumers don't see the results. So we realize we're going to have to get more creative here. We're going to have to leverage some laws and put some pressure on these credit reporting organizations to right those wrongs, right? And when they don't, what does the consumer do to fix those things? And that's where I think credit repair really is a solid product. But in their opinion, when they look at the marketing and they look at what these guys are selling and they look at who these guys are and they look at leadership and uniformity and transparency and is it there? Are these guys legitimate? They see that most of the material in play is non-compliant. It's Section 5 prohibited acts and practices type stuff. It's UDAP type stuff. And
yeah, interesting points because man, you meant a whole mouthful there. I want to touch on that non-compliance, and then or go ahead. I think you. Okay, there we go. Cool. So I want to touch on that, but I want to go over a couple of these messages real quick that are popular on Facebook. So we've got Alexa Fleury. She says, what if you stop accepting merchant services and just checks? Well, so a couple points to that. So even if you get paid by checks or cash or whatever, that telemarketing sales rule has no bearing on the medium of currency, right? So, I mean, even if you have telemarketing and then you have the convenience of operating a business, which is merchant services. Okay, so if they chop off your merchant services, that still doesn't affect the fact that they believe you're telemarketing no matter how you get paid. So that is an underlying issue we've got to deal with. Charles Roseal, you've posted that you've seen some FTC cases against CROs using the TSR. And interesting, so Charles and I, man, we had a call a few months ago. Charles has been around for a while. Charles, you testified, he actually testified in Congress when they were interviewing for arguments on creating the Credit Repair Organizations Act. So Charles was actually in Washington and did some testimony back in, I guess, the 1994, 5, 6-ish hours. That's really cool. So I appreciate your feedback, Charles. And
so
Goodman says,
here's where I want to get to the point of popping that zit, right? Because what it comes down to for the regulators, okay, what they're looking at is they're seeing a ton of rogue behavior. There's no real licensing requirements or vetting requirements for you to be a player. It's a low barrier of entry type business, right? But what they're saying is that these companies are artificially inflating the creditworthiness of these consumers knowingly and giving the lenders an inappropriate idea of who that person is and whether they're lendable, right? So if I were to ask the question honestly of the industry, how many of you guys are saying, look, it doesn't matter if that credit reporting, call it a file, is accurate and it's derogatory, we can remove that, right? So they're saying it's accurate, they definitely paid late, they definitely delinquent on that account, but we're going to remove it so the lender can't see it. Now the lender is looking at a score that's artificially inflated. They're looking at a credit file that's artificially inflated, and they're making a lending decision based on that information. So credit repair should exist to eliminate errors, right? issues on the credit report that shouldn't be there, that, double collections and things like that are negatively impacting the score. And good credit repair operators are saying to the consumer, hey, look, we're going to address any of the issues on this credit file that are not accurate, because that's what it's for. Errors, it's for, inappropriate reporting.
Yeah, so let's touch on that. I mean, so again, you're just fireballing all these things out there. I mean, we got to slow down and we got to back it up and then slowly go forward here. So it is important to note that the Credit Repair Organizations Act, which is the law of the land, that is the credit repair federal law, it does make false and misleading statements by a credit repair company unlawful. It expressly spells it out. So, I mean, that's our version of the FDCPA, right? I mean, they're both anti-deception laws, but it actually reins in how you can pay. I mean, it's about as draconian, except for when you get the TSR, right? Because it says you cannot charge until the full and complete performance of such service, which is the language of the CROA. So how you define that under your contract is what you have to figure out, where most people now, it's either pay for deletion after we get it deleted, or my contract is month to month and I charge at the end of the month. Okay, so, and there's precedents out there that state month to month is within the scope of CROA. So, I mean, you've got the law, which does spell out you can't charge until the full and complete performance of such service. And you've got the anti-deception provisions of CROA, which I think touch more on what you were saying, which is, hey, what are these people promising? What are these companies saying? And what are they doing? All of which have nothing to do with the TSR, really, because the TSR has to do with telemarketing. And, oh, by the way, you can't charge until 6 months after basically such service, right? Basically, TSR is like until after you've raised.
Why did they do that?
What's that?
Why do you think that they did that? Why do you think they said 6 months?
Well, I think because they were in effect basically trying to make our industry to where, it's about as close to making it illegal to operate as you can. I mean, it's not making it illegal, but it's impractical. You can't run a business if you can't charge until 6 months. And so, I mean, because nobody who passes a rule like that says you can't get paid until 6 months. I mean, you either make an industry illegal, okay, which, I mean, to outright make an industry illegal, I mean, if we look back, not going really deep, and I'm not a lawyer, I don't give legal advice, but if you look at prohibition, right, they literally had to do an amendment to the Constitution to make alcohol illegal, right? That's because, the federal government can regulate commerce, but they can't make commerce illegal, right? Like, that's why they had to do an amendment to the Constitution to make alcohol illegal. And then they had to repeal that amendment to make it back. And then, of course, now we've got like the war on drugs and all these things, which, are, in my opinion, highly unconstitutional, because you can't just make something illegal like that. So by saying, well, you can't get paid until 6 months after you deliver your service, they're like saying, okay, well, we're not making it, illegal, but we're basically making it to where you guys can't get paid. I mean, they're trying to legislate executive fiat, if you would. Go ahead.
And I'll say, I was a victim of credit repair scam back in we'll call it the late 90s. And I paid almost $2,500 total to get these negative items off of my bureau and all of that. And they did that. Initially, all of those things sort of came off, and I saw that on my bureau that they were removed, and it was great. I paid this $2,500. And about 3 months into that process, all of a sudden I noticed all of those things that were deleted came back, and they came back verified. Like, it was rough. And I called the company to say, hey, what's going on? Why is all this coming back? You said that they were never coming back, whatever. And because of the techniques that they used, it didn't remove them completely. They got them removed temporarily, but those creditors did come back and repost correctly. And the company went away. They wouldn't answer my calls, and I was $2,500 out. But now I had this huge amount of crap on my credit file, and my credit just tanked. And I said, you know what? What's to stop a company from doing something like that, where they file the paperwork necessary quickly, form letters and otherwise, they get this thing removed, and you go, oh yeah, I got this great service, but then it comes back with a vengeance right down the road. And so I almost feel like the reason why they're saying, look, 6 months, prove it. We want to see that your work is real and it's stuck. If you're going to promise them something, you can't promise them something, give them this quick instant result so that they pay you, and then 3-4 months down the road, they're actually in worse shape than they were before they even engaged your service, right? So this makes sure that like what work is done actually sticks, right? That 6 months later, if what you have promised is what's happened, collect your money, no problem, right? But I think that's their way of saying, okay, if we can't guarantee that you guys are actually going to provide the service that you're promising when you're selling this pie in the sky thing on your website and Facebook posts and phone calls, and you're saying, I'm going to get your credit into the 700s, I'm going to get all these derogatories removed, blah, blah, blah. You start paying this money, and then that thing never manifests. So now you're in big trouble. So by giving them a 6-month window, they're saying, put your money where your mouth is. Let's if you say you're going to do this thing, then demonstrate that you can do it. And in 6 months, verify that, and we're good to go. We got no issues. Take your money, have a nice day, right? Provided a good service. Unfortunately, that's not what's happening in the space, but
Yeah, but I mean, there's no industry where, I mean, basically that's essentially, like I said, prohibiting the industry itself, right? I mean, and we've got some comments. We've got Jim saying, hey, the reason it's 6 months is because information can reappear if it's accurate. I mean, if it's certified, if it's deleted or removed, a furnisher in a bureau can reinsert it at any point in time if they certify it to be accurate. So I mean, at the end of the day, I mean, any industry you can have, especially any newer industry, you're going to have people in any industry. I mean, really, you're going to have people that just give you a bad service, right? And so, I mean, let's, I guess, kind of take this to where we are today and how we move forward. I mean, we've got Congress that said, hey, you can't charge until the full and complete performance of such service. That's the law of the land. You've got all the state laws and stuff that most of which require bonds and stuff, providing extra protections. Then you've got this telemarketing sales rule, which nobody voted on that rule. Nobody had lawmakers create that rule. It was created by bureaucrats, okay, because they were trying to rein in this industry.
But there was a large comment period. I mean, when 2010 came and they were proposing this law, they had almost a year of time where they were bringing in comments and suggestions and all kinds of affidavits and all kinds of things to really work through it and decide if you don't like this, what we're proposing, tell us why you don't like it, and let's have that dialogue, right? And lots of information flew. And they still, after all of that, decided that this was the best course of action to rein in all this rogue behavior.
Yeah, and so, I mean, that's a good point, right? I mean, so when you create a rule or whatnot, or regulations and rules, technically are different things, but they're both executive agency creatures. They're not laws passed by the legislative. So there is this waiting period and this commenting period. But if the tide is against you, then the tide's against you. And if a law gets passed, a constitutional law, again, I mean, if you're gonna make an industry actually outright illegal, really technically my understanding is that requires a constitutional amendment, right? That's why prohibition required that. So they're like, okay, we'll just make this thing so incredibly unfeasible to where, and we'll just write it into this executive thing, and the tide is against these poor guys, and they don't have really any sort of legitimate trade associations. At the time, we're talking 10 years ago, right? They can't band together. And of course, your perspective from debt settlement, which there was a lot of money in that, but the tide was against, right? So, where we are today, I mean, we've got the CFPB, they're going against, the companies for what they perceive to be wrongdoing. Hopefully there is wrongdoing, or else why would they go after them? But that's not really the point. The point is they're not just trying to enforce, the anti-predatory provisions of CROA and, oh, well, is your contract not really written to where you're not charging after your performance or whatever? They're saying, oh, by the way, you telemarketed because you've got an internet and you collected leads, and, and so this affects really everybody. That's really kind of where we are today. So,
always, that was that question I asked you the other day in the feed, which I think is a really valid question, right? Whose job is it to know what rules apply to your business, what regulations, what registrations are necessary, what state guidelines are there? Like, who should know that when they're starting a business? It should be the business owner, right? I mean, if you're going to start a business, if you say you're going to sell something in a really highly regulated market, right? Real estate, mortgage, whatever, you've got to go through a process to get licensed, to get vetted. You got to jump a lot of hoops, and then there's a lot of rules before you can just go do it. I can't just go sell a piece of real estate unlicensed, and just expect that that's going to go well for me, right? But at the end of the day, all these people are just blindsided all of a sudden by this TSR, and I'm like, we've been talking about this since 2010.
Well, that's so yeah, so let's talk about that. So, I mean, I agree with everything you said. And So it is your, your responsibility as a business owner to know the rules and the laws that regulate you. Absolutely. The problem that we have as an industry is based on the current interpretation of TSR and how the CFPB is enforcing it. There's nobody who can run a compliant business, essentially. I mean, if you've got an internet, if you've got a website, if you've got a telephone, as far as they're concerned, you are telemarketing for the most part.
But then comply, right? Then comply with those rules. If you know that you're in an industry where these things do come at play, whether you don't agree with them or whether you think it's heavy-handed or overreaching, none of those things really matter, right? At the end of the day, it's like, I think I should be able to carry a gun in a federal building and not have to worry about it. But there's rules there. So if I go and do that, I'm going to pay that price, whether I agree with that law or I disagree with that law. And I can constitutionally argue it, but at the end of the day, the law is the law, right?
This is where we get to the good point. It's like, it only took us an hour to get to where we're going to have the Matt and Steve.
We're going to arrive.
Man, let's get into the meat and potatoes. And this is going to be good stuff because, like I said on my video the other day, it is not unreasonable for trade associations and for industries, number one, to sue regulators, and number two, to lobby to change laws, right? That is actually just how business is done. So to your point of, well, comply, well, right there is like the Achilles heel, or the crux of the whole thing is, if you've got a website, if you're collecting leads from a website, that is telemarketing as far as the regulator is concerned. And so it's practically impossible to actually comply. And so to your point, though, who's responsible for understanding?
But how can you comply? Like, who says you can't comply? That's the question, right? Because a lot of people are saying it, like, you can't survive and you can't comply with it. Kuroa and TSR are at odds. You can't comply with them both. But after that PMH opinion, the judge said, look, they're very complementary. Kuroa and TSR, they're complementary. They deal with the same issues, but they don't overlap, and you got to comply with both of them.
So,
right?
Okay, so let me ask you. So when you're saying comply, are you saying run a business and be able to get paid pursuant to Kuroa, or are you saying run a business and don't get paid for 6 months pursuant to TSR? When you're saying who says you can't comply, what are you meaning by how you get paid and comply?
Let me ask you a question. If there's a federal regulation that says you can, for instance, let's say we go by Kuroa or whatever, we can collect tomorrow, right? We just have to do some work and then we can do it and it's going to be fine. But then a state has a specific law that says, oh, you can't collect an advance fee for 3 months or 2 months or whatever that might be. That state law is very important for the constituents of that state. So if you're going to operate in that state, you've got to comply with those state laws, even though they're differing than the federal laws. But the federal laws aren't nullified by that state law. You have to comply with the federal law universally, and then comply with the state law secondarily, because that's where you're marketing and that's where you're taking on consumers. So there's a lot of these scenarios that play out in the real world of business where you have to comply with several different rules, right? That maybe don't even pertain to each other, but they both are in play, and you got to comply with both of them, right?
Yeah, so let's touch on that. So, so a couple of points of observation. So one, you're comparing federal versus state jurisdiction, right? But law versus law, right? So for sure, that's why you got to get licensed in your state, and you've got the federal law. TSR, though it's a rule, it's not a law, first of all. And so I think it's important just to understand the distinction is that that is just an executive regulation, or how do you think things should be.
That's semantics. I mean, I hear that a lot, and I think it's semantics. The bottom line is, can you get into trouble in either of those scenarios, whether it's a law or an amendment or a regulation?
Let's talk about let's talk about what you think the solution is, because you had said, hey, who says you can't comply with it? And so my question was, are you saying businesses, essentially we can agree, I think that, essentially if you've got a website and an internet presence and you capture leads and you call people, that's telemarketing under the CFPB. Do we agree on that?
Yes.
Okay.
And until the laws or the rules or the amendments are rolled back or addressed in some way, until that happens, the law is the law. The rules are the rules, right? So you can't get away from it. The TSR is in play, and they are now enforcing it. And there's been several cases where they've enforced it since 2010 against credit repair and settlement and otherwise. But just like the settlement industry, and we have to look at, we'll call it our brothers and sisters in this vertical. I consider debt relief as a whole. Anybody who's dealing with a debt-related or credit-related issue, they're really all connected. Debt settlement, debt management, credit counseling, credit repair, student loan, tax resolution, all of these things that address debt or credit-related issues, they're considered a disparaged segment of the population. So we're dealing with people that are in a hardship. They're in a situation that they're reaching out for help or are easily enticed into receiving help based on these certain scenarios, right, that they're dealing with. So we have to look at our sort of our brother and sister verticals. That settlement, they went through this. And people said the same thing at that time. No way can you survive this TSR because you're not going to get paid for 6 months, maybe up to a year, right? But yet, there are no advanced fee companies operating and making tons of money in the debt settlement space right now, complying with that TSR amendment.
Yeah, but that's a no advance fee, which is what Crow is, but that's not a 6-month prohibition on collecting your fee.
It's worse than that. It's actually worse than that because it takes 6 to 9 months up to a year in some cases to get your first settlement. And you can't.
Yeah, but they're collecting the money. And so let's talk about that. So they're collecting the payments and putting them in escrow. Okay, so they are collecting consumers' money, putting it in escrow, which is all allowed. Under a credit repair, you can't even, I mean, there's precedents which state collecting money and putting it in escrow is, a violation of Crow. So, I mean, I think,
Where does it say that?
There's precedents. They're bad precedents, but there's Crow precedents that state that you've still collected money. So, and so that goes to, how do we move forward, right? So I'm still trying to get an answer from you as to, you say
so
these companies can comply to it, but if you've got a website and you're telemarketing under the, the current interpretation, are you saying, so how do you say any one of our companies listening, okay, how can they in fact comply with TSR? Is it they can operate only within their state, which though still a website, if you've got a server on Google in another state, as far as the regulator, that is interstate commerce, which puts under the purview of FTC. So you can't even really say, well, in your case, you're up in Washington and I'm in Texas. If I'm just doing business only in Texas, if I got a website, that thing may be going around the globe. So are you saying, hey, do business, but don't charge until 6 months? Or are you saying, in your opinion, there's actually a way to where you are not telemarketing if you've got a website, a digital presence, and a telephone?
So these are all of the fundamental, I mean, there's a series of fundamental pillars that are involved in sort of the creation of an industry and or moving an industry into a mainstream scenario in the marketplace. We haven't discovered that, at least in credit repair, it hasn't been done, despite the fact that we do have a trade group, if you will. Those things haven't been addressed. So number one, you have to rein in the rogue behavior, and you can only do that through uniform standards and protocols that are uniform in nature, getting everyone on the beating to the same drum, right? Secondly, you got to vet the companies and make sure that they're doing the things that they say they're doing. Look at contracts, marketing, business licensing, bonds and all that. So those are all of the important parts of like regulating your own space and getting everyone together. Then you start engaging the existing rules, right? Now, the TSR, everyone says, look, this is really heavy-handed. I say we have to actually comply with all of these rules in play and then clean up our own behavior and then present a new case to the government and start pushing back on these rules. You can't do it prematurely, though. And I know that the missile's out of the silo at this point with the NAXA lawsuit, and there's no putting it back. But there's no possible way, in my opinion, that the government is going to go, yeah, no problem, you're right, free pass, right? When the problems still exist, there hasn't been a change in the industry. It's not very well organized at all. I mean, everybody's doing their own thing. You said it yourself when you're talking about coaching. There are probably 200-300 coaches just in these groups that we're in that are charging thousands of dollars to just resell a bunch of hashed material that other people have created that may or may not be even right? And they're charging big money. So everybody's got different marching orders. Nobody knows. I follow this guy. I follow this guy. This is my mentor. This is my coach.
So I'm hearing you, but I mean, not to get off on a tangent, but coaching wouldn't be credit repair, right? So that would actually be outside of the purview, right? That's business to business. So that's a whole other thing. But I hear what you're saying. So again, my question to you, okay, I mean, you said, well, the missil's out the silo. It was premature. So TSR has been around for 25-ish years along with Crow. So if, there's a post from Lyle Cruz. He says, so what is the solution for CROs? So, my position is that, hey, you know what? I support what AXO did because you know what, it is not unreasonable for industries to, number one, sue regulators, and number two, liable to get laws changed. That happens all the time, everywhere. And there's a point in time where you're like, hey, our industry is being chokeholded, if that's even a word. We're going to war. So that's
It is now.
AXO did. I think that, you know what, I support that, and I support the beginning of the fight, so to speak, right? It is going to be a fight. Now, from your perspective, though, you've said some things I want some clarity on. It's good for healthy debate. You said you think it's a little premature, but you also said people should comply. So let's go back to the comply. I still haven't got an answer for you. So for those,
I think it's really clear. There's only two ways that you can comply with the TSR. Number one, you can comply by being exempt from it, right? It doesn't pertain to you, right?
so like, let's talk about that. So not having a website, essentially, I mean, and not dialing outside of the state.
So the exemption that's been written into the TSR was written in there to deal with direct sales companies back in the 90s, right? The exemption exists there for that reason. If you're going to do a face-to-face meeting with your clients, then you're technically not using the telephone or telephony systems or internet communication systems to consummate the sale, right? Okay. So face-to-face in your own state, smart idea. Right? You're meeting with your clients, they get to see you, you get to see them. There's an accountability that's happening there. There's a transparency that's happening there, and you're exempted from that rule. Now, that does not exempt you from CROA, right? But it definitely puts you back in that position. Now, for those of the companies that are out there doing national business and doing intrastate commerce, then you now have to comply with that TSR. And in this case, what they're really looking for is the same remedy that fix the problems in the settlement industry. They want to see a third-party, SPA account where the consumer is depositing funds. They're in full control of those funds. They can extract them from their own bank account anytime they want to with that third-party escrow type scenario. And you're going to escrow those funds over that 6-month period of time. Upon completion and demonstration that the services were rendered and that what you promised was actually received, now you can flush the money from that account into your bank account, right?
So is your belief that if a credit repair company, after the full and complete performance pursuant to CROA, says you owe me $2,000, collects the $2,000 and puts it in an escrow and then doesn't actually take it out of there for 6 months, is that what you're saying is your belief that would conform to TSR? Is that what I'm hearing?
I'm saying that worked for settlement because, number one, you're not collecting an advance fee at that point because the money that's being moved is being moved into a consumer's account. It's in an account that's under their control. It's being administered by a neutral third party, right? So contracts are all in play. Everything is there. But the question of good luck getting paid, and I heard that on one of these emergency Zoom calls, good luck getting paid 6 months after you did the work. Well, that's not true. You just have to find a system that will allow you to capture that.
So you said, okay, that worked for settlement, but I think it's important to understand both the settlement laws and the TSR spell out provisions for using escrow, whereas the credit repair provisions of both CROA, state laws, and TSR, nowhere in there spell out so we're still, I think, kind of under the same thing of, well, we just don't really know. There's no clarity on that.
There really is clarity, though. It's very cut and dry. And the last lawsuit even said that this credit repair company was supposed to be using a SPA account system, and they weren't. And I thought that was really interesting that they added that language into that lawsuit but prior to that, they hadn't mentioned that particular part of it. And that's a solution that was created completely through the settlement folks looking at that rule and going, okay, so we need a third party because, number one, what happens if you're collecting the funds and saying, I'm not going to take them? Can't trust that, right? It has to be a third party. They could do their own set aside funds, the consumer can, but that doesn't guarantee that you're going to get paid, right? So the goal is that you want to collect that money in escrow. And at the end of it, if in 6 months you can't prove that change occurred, what you promised was received, then they get that money back.
Well, let me ask you, so let's dial it back to where Matt and Steve, we're going to get together and drink some beers one day when we get together. Let me ask you a very practical question.
Yep.
Is what you're talking about practical? And
absolutely.
So, how many companies do you know actually don't get paid until 6 months after delivering an updated credit report?
Anybody that's involved in the fringe financial services industry that's touching a consumer's personal finances that is regulated by the TSR, TSR amendment, and or CROA, those are them. I mean, there's no option.
No, I didn't ask you if there was an option. I mean, I'm asking you, practically speaking, like, do you know any company who's been in business for over a year and is like, you know what, I'm going to do this, but I'm not going to get paid until 6 months after? Okay.
Not in credit repair.
Okay. So like now we're reining this thing in. Okay. So we can
look, we want to make these weird examples like, well, you wouldn't change your own oil in your car, even though you can, you know, all of that. But look, at the end of the day, we're talking about very important sort of critical consumer data. I mean, we're talking about social security numbers, credit card numbers, full credit profiles, history of address, things that could literally become a train wreck if that data from those consumers was in the wrong hands.
Yeah, but you know what? None of those issues, those privacy issues, are part of CROA or the TSR, right? I mean, so I hear what you're saying. Again, it's important, but none of those are part of the predatory practices that these things. So I mean, I think let's focus on like where we are, how we got.
And I will. So I want to bring up, you brought something up that I think is a really fundamental, it's a fundamental issue, I think, in the industry and how we're viewing this, right? And number one, it's impossible to comply. That we find it convenient that we can dabble into these laws and we can say, well, yeah, I agree with this stuff here, but that other thing wasn't specifically addressed. Yet that thing that wasn't addressed is probably the driver behind the reason for these types of rules, right? So we have to, either we're going to look at the law black and white, this is just what it is and this is how you have to comply, or we're going to look at it and say, well, but it really wasn't specific, so really we could probably do that, but this thing says we can't, and we make it this confusing, chaotic mess, right? And our goal is to find order in that chaos. The way we do that is we look at the letter of the law and we look at the spirit of the law, because the spirit of the law is very important. Even though it may not be a technical black and white issue, anywhere you see in the legal writing and definitions inside of these laws that what we would call the letter of the law, the black and white, it's open for interpretation in some cases, right? So how we develop, you know, what are they trying to accomplish here? We have to look at the spirit behind the law. What are they trying to curb using this language? What's happened that caused them to do that? So I think the answer, we have to go black and white, we have to go spirit, and we have to go letter. So
I mean, we both have a lot of common ground and all that, but let's back up for a second, okay, to where we are and how we move forward, practically speaking, right? And again, I understand your perspective, having come from the debt settlement and seen an industry get completely turned upside down. So I get that, but here, you know, here's kind of where we are. So you had said a minute ago, hey, Stephen, no, I don't know of any companies in credit repair who are 6 months to get paid. Okay, so that's the reality of where we are. Okay, so we've got to treat us. We've got to. You've got. I mean, so number one is you've got folks posting up things and they're like, well, this suit was premature, but not a single one of these persons are, you know, if they're not meeting in person with everybody to sign up in person, so it's got the telemarketing exclusion, they're basically telemarketing for the broad stroke perspective of how a regulator would look at it if they wanted to come in on you. So we have an industry, you know, and I know you've got a trade association, there's, you know, NACSO, who's the one that's filed the suit, and they've got a lobbyist, and you've got their members who are saying, hey, you know what, CROA is the law of the land. Okay, you know, this is their perspective, and it's kind of my perspective, and we can disagree, but regulations are not laws, they're regulations, right? And so part of how we got to where we are with TSR is through court case decisions, right? Because you were like, well, there was this decision a year or two ago or whatever that said you can use escrow, but when TSR was originally written, it did not cover the internet, right? And now the internet covers it because of court cases and decisions and things like that. So okay, so you've got court cases that have further defined a non-law, a regulation.
But actually, that was engaged. I mean, they definitely had a lot of information come out about the TSR and how to comply and what it covered, right? So there's tons of information on the FTC's website about the telesales rule amendment as it applies to these fringe financial verticals, basically saying this is what it is. Like when they talked about, well, I only do business over the internet. Is this covered? Yes, you are covered. And they explain why you're covered. So and this was in 2010, before the actual compliance aspect of this in 2011 was enacted. So it's there. I mean, the information has been there. That's the troubling part, is that we've known this all along, and yet nobody has made the moves to change it and to say, look, you have to comply with this. And the reason is it's money.
So
My
let's,
money.
so let's,
I can't.
so here's the thing though. Okay. So you keep, this is where, you know, I really want us, I want us to, like, this is why we're doing it, right? So we can figure this thing out. So you keep saying, hey, they've got to comply, but you said also, Stephen, I don't know of a single credit repair company that complies. So the flip side is, you know what? We don't think that this is proper. And so as an industry, we're going to do what we need to do. Like, failure is not an option, right? You know, we're going to do what we need to do. And you know what, if this, so that's where this lawsuit against the regulators came in. And let's suppose the judge says, hey, you know what, Naxo, you know, Naxo not in favor of you, you know, plaintiff not in favor of you, in favor of CFPB. Okay, so then it gets appealed, it gets tied up, and then there is a lobbying thing. And you know what, if you can sit here and say, hey, I've got a trade association, but not a single person that I know of conforms. Okay, how can you not sit here though and say, hey, you know what, I can at least appreciate the fact. So let's back up for a second. So what do you think is premature after 25 years of people not conforming and nobody attempting to treat this like a real industry and fight back against the rogue regulators? What do you think was premature?
Because, so I think the industry is not ready. Okay, so number one, Naxo's been in play for a very long time, and yet we're just now talking about this TSR. Yet we're talking 10 years ago, these laws existed and have existed the whole time. Every business that has been sort of subscribing to CROA only has used CROA to find ways to collect money upfront. That's really the core issue. They need to get money in, otherwise they don't want to do the business. They're not doing it as a nonprofit, right? They're doing it as a business. So CROA allowed them to continue to sort of collect advance fees and maybe not provide the service, right? So now, knowing that the TSR is in play, that thing is what they're going to now start to enforce, because they're saying, but now you're collecting these advance fees anyway, even though the spirit of CROA is really not being upheld. It's you're looking at the letter of it and you're finding ways around it. When I have conversations with people about CROA and we go through line by line, they ask questions like, well, what if I'm just coaching them? What if I'm just giving them advice? What if I'm giving them free information? Well, that's laid out right in CROA. It says who is a covered person, right? And covered people are, if you do these things, you're covered, right? You're officially under this law. TSR, same thing. So at the end of the day, we've got the industry's completely out of compliance with the laws, but CROA didn't fix the problem they intended it to fix,
so
which was consumer harm.
Okay, so yes, there's a lot of people that are out of compliance, you know, and I look at a lot of credit repair contracts. Part of what I do with Naxo is I assist, you know, when new members come and I review the contracts, and most of them I end up failing, honestly, because it's just small little things in the language, right? You know, not a month-to-month contract or whatever. So I do agree with you. If you were to look at it, a lot of companies are out of compliance under CROA. But that still leaves us to the issue of, okay, if you think most, so then it leaves it to the ones who have the capacity and the ability to fix it, I guess, for lack of a better way. If we can start with the facts, okay, the facts that you and I can agree that neither one of us know of anybody who can actually conform to this. We can both agree to that. Okay, we can also
not can comply with it, because everyone can comply with it. It's that
currently
most haven't. Most won't. They're deciding not to.
Waiting 6 months to get paid, right? But we don't know of anybody who currently does that. Okay, so we can agree to that as a base level. We can also agree that there's no barrier to entry for our business, practically speaking. You get a bond, you get a license, a couple $100, you're in business, right? So you're always going to have those issues. I mean, the states have the state laws. We've got the CROA. So then you've got the issue of, okay, well, the industry will never be ready for all those reasons, except for where if you've got people who are able to understand the high level and say, you know what, as an industry, sometimes you do have to actually go to war, right? I mean, that's what industries do. So we don't end up the way of, you know, debt settlement and all those other things where you know, just basically legislate out of business. So from that perspective, like a mutual starting point, okay, we've got a trade association that, you know, regardless of, you know, who's running it or who filed the suit or whatever, you know, they do have the ability and the capacity and the mechanisms to do what they did, which is file suit against the regulator. And
which is also really, I mean, it's really telling, right? And this is where I think we've got this great friction going on. And I think it's awesome that we expose things, right? I'm all about 100% full transparency. put a light on it and look at every little detail of it, right? The question today is, it does matter the timing of filing something like this declaratory action. It's very important when we look at the members of the main trade organization and knowing that none of them are in compliance, but on top of that, that these members that are supposed to go through a kind of vetting process clearly haven't, because you've got rogue bad behaviors happening in the membership. That then makes the entire membership a risk. You join an organization where there's known bad guys and no systems to check and balance those things, and then you say, we're a bunch of good guys and we want this to be a certain way. Then you look at it and you go, yeah, it's not full of good guys at all. I mean, these guys have terrible, rogue, call it marketing and advertising, where you're dealing with UDAP and Section 5 violations left and right, completely rogue, false promises, omissions, all kinds of stuff. But then on top of that, how are you not educating your members about this for the last 10 years?
I don't disagree that these are bad things, but we're skewing away from the facts at hand, though, right? I mean, again, none of these, these things are spelled out in CROA, right? And so, if you're doing deceptive practices, forget about UDAP, unfair and deceptive trade practices. It is a violation of CROA to do that. But let's focus on the facts at hand. Okay, so you've got CFPB putting the squeeze on companies, using a rule which was very rarely used previously, and they're on a mission. So, okay, so where we are. All right, so let's talk about actually how we can move this thing forward. So there is a suit that NACSO had filed against the regulators, and it has basically 3 causes of action. I'll do a quick screen share, actually, since we are on the Zoom, and we can just take a quick look at it. For those folks who are watching, let's see here. Okay, can you see my screen, Matt?
I see it.
Okay, cool. So let's just look at the quick 3 causes of action, and we'll get back to where we were. But let's talk about what they've done, and then how do we actually figure this thing out. So this is the NACSO suit, which is posted in. But count 1, unlawful agency action in excess of statutory authority. So the first thing that they're being accused of is acting out. The CFPB is acting outside of the scope of their authority to regulate. So that's the first count. The second count is unconstitutional content-based restrictions on protected speech. So basically kind of First Amendment things, saying that the First Amendment protects what they do. And there are obviously Supreme Court precedents which state that businesses do have First Amendment rights to freedom of speech. And then the third thing is count 3, the TSR is what they call unrestrictive, which basically means it kind of further limits the free speech issue of credit repair companies beyond everything else that it restricts. And so that's, I guess, a legal theory of under-inclusive right here. Okay, so stop the share. Let's get back to here. But so we've got that suit. It's been out there. Okay, so we can all agree that neither one of us know of any credit repair company who actually does or can, practically speaking, stay in service under TSR. So
I'll say this. Number one, that's a losing fight. It's been tried by several much bigger companies that have attacked and or gone after the CFPB, even down to its constitutionality and its formation. There's been a ton of this, right? It won't stand. So
those unconstitutional are causes about the TSR, though. So, but okay, so let's talk about that. So, like I said, let's say the judge says, okay, so but what are the alternatives, right? I mean, let's say the judge says, hey, you know what? Let's say the judge says, hey, you know what? You guys lose, okay? And if as an industry, we need to, if we as an industry say whatever it takes, right? Like we literally have to figure this out, whatever it takes, because that's the only way we survive. Because nobody's going to be in business helping the consumers. And we can agree to that. Dude, there's nobody who's going to sit here and wait 6 months to get paid, especially with the attitude that was a rule that was passed a year before the law. Okay.
Yeah.
We are conforming to the law. Those people who, forget about the folks who, the contracts aren't really teed up to, whatever. I mean, that's certainly an issue, but that's not the issue at hand here. So if we need a lobby, I don't think that's unreasonable. I mean, I think that's quite reasonable to say, you know what, we're going to do whatever it takes to fix this to where it is ruled, even if we have to get a carve out in CROA to say CROA expressly supersedes TSR. Like from my
So
perspective, and I think where NACSO is, I mean, I wasn't really involved in the suit or anything. I am a member of NACSO for 10 years, but I mean, you know, I just see it just like everybody else. But like, I think they've got the attitude of, you know what, we're at war and literally it's do or die, right? Versus just saying, oh, well, this will never work. And there's these
why is it do or die right now?
Well, I mean, how many of your trade association, as a NACSO, how many trade association members of yours are you going to see get sued and you've got a lobbyist before you're just like, okay, you know what? I mean, you know,
What
why
are they
not
getting
now?
sued for?
Hmm?
That's the point. What are they getting sued for, right?
Well, but that's not the point. The point is because the issue with TSR has nothing to do with.
But this is where I think it's really crazy. Is this thing is not new? It's been around a long time, and this has been a situation of lawsuits over and over. But now because a couple of key NACSO members get sued or engaged or CID'd or whatever, now all of a sudden it's an industry problem, and we shell out all this money to.
Well, the thing is, again, we're getting. I think we're getting sidetracked from the facts because it's if we start at the starting point of you and I, neither one of us know of any credit repair companies that currently conform. It is an industry problem. It's not now. It is because of this suit. This suit just brought to light, brought to the conversation.
What about the other guys that got sued a few years ago that weren't a part of NACSO that was going to impact NACSO's members anyway, right? What
So
about
what is
those?
your, I mean, so let's talk about it. So what is your practical solution?
So there's
right?
only one. There's really only one way forward when you really lay out the straw man of this thing and you kind of look at it. You look at our history, because if you don't learn from your history, you're destined to repeat it, right? So we have to look at where this has been applied in other verticals that are similar to ours, and we kind of create a framework around a path forward, right? And for this, at this point, the issue, we've come to a hard stop, fork in the road. TSR is in play. We're going to enforce it now because you guys won't clean up your own behavior. Fine. That's already been in play. So what needs to happen, number one, is A, all of the companies need to get into compliance with the TSR, CROA, and state laws, period. We need to create that model where we've got SPA accounts in check. We've got a 6-month waiting period that's going to happen. As far as funding, sorry, but when we have to add additional components as a private market, industry, then that cost of business gets deferred onto the consumers. So now credit repair becomes more expensive. You're not collecting $100, $200, $300. Now it might be more like 1,000. But we're gonna wait that out that 6 months. But because we have to wait that 6 months out, that payoff has got to be enough to deal with our cost per acquisition, deal with our general operational costs, and make that a fixed system. From there, we can bring in lending arms that will come in and actually lend on receivables like any other factoring firm would. They come in, they say, hey, I like what's happening here. We're going to factor out and get some advance, in a way, get an advance payment happen because they're going to fund out that money up front. That's how settlement did it. And now we have a bunch of well-funded companies that are getting paid today for business that they're really not collecting on for 6 months. But those are just some ideas, right? Some concepts. But we have to get to that place where we're not collecting advance fee. Then we have to address the UDAP and Section 5 stuff, the marketing and advertising. We got to create uniformity around that. We have to create a complex vetting process that will allow us to really look into a company and say, no, you can't have a Regis or a PO box office. We need to know where you are physically. If you're a one-man show working in your home, that's fine too. There's nothing wrong with that. It's America, right? But you've got to be vetted. We got to know that you have your business license. We got to know that you're registered in the states that you're doing as a foreign entity in order to do business in those states. You're complying with those federal laws, the state laws, not collecting advance fee. Your marketing is clean. It falls into this category. Once we create that model where consumers are not being harmed, we don't have any complaints, we're adhering to the laws that are in play at that time. Now we have the moral high ground. From the moral high ground, we can engage these laws that we feel are oppressive after we demonstrate that we're a big boy industry and a big girl industry. We're able to now manage and regulate ourselves. We have enforcement mechanisms within our own ranks, and we can guarantee you that if a company comes into this organization, they have been fully checked out. They've been audited, vetted. We know what they're doing. We know where they're at. There's accountability there. and the consumers are now who we're focused on, right? Again, from there, we can begin to engage, right? You can't engage the regulators and say, change all these laws when we're completely rogue as an industry. There's
Why not?
absolute consumer harm happening,
Why
right?
not?
I mean,
Because, well, number one, it is a rule. It's not a law. I mean, I think it is important for that distinction. And so I guess my
but let
question.
me ask you a question. So I love that you say that, but I've heard this so many times from
Well,
others
it's
as
true. I
well.
mean, it's a factual truth. It's an executive
Let
rule.
me ask you a question though. Does that rule versus the law carry the same penalties for violation?
Well, if a regulator attempts to use it, I mean, consumers can't, individuals can't sue with rules, right? They can't sue with, I mean, so only the regulators can. So,
Right.
like,
But forget about all that. That's all, kind of out there, right? But
well,
at
no,
the end of the day,
I think it's really relevant though, because like as an example, okay, let's say you were a credit repair client of mine. Okay, you could sue me for violating the Texas CSO law and Chrome. You as an individual could not sue me for the telemarketing sales rule. You could not as an individual. Only the government can use that. So I think it's actually relevant because we've got a rule, which yet to your point, there was like the 6 or 12 month, comment period and stuff, but it's a rule that was not passed by our elected officials, and consumers cannot actually use it if they want to do private enforcement.
but I mean, to be fair, they have the authority to do that. Congress has given them authority to make rules. Rule-making authority has been granted to these regulating entities. So at that point, it doesn't matter if it's a rule or a law. At the end of the day, if it applies to you and you break the rule, you're still punished just as heavy-handedly as you would violating the actual law. And
So-
generally, breaking the rule, you've already broken the law. So
I think that, I think we can agree to that. I think that ties us to where we are. So they can make rules as long as the rules conform with the authority that Congress gave them and it's constitutional. And so that leaves
and they
us.
do.
Well, but so that leaves us to where we are right now, right? I mean, so
Yeah.
you've got two ways that you look at it, I suppose. Your way of looking at it is, hey, Steve, and I currently don't know of anybody who conforms. We've agreed to that. But I think we should make everybody conform. We know that's not practical. That's one way of looking at it. The other way is, you know what, as an industry, we're going to act like other big industries, and we're going to go ahead and we're going to get a little seat at the table instead of being the food on the table. And we're going to fight whatever it takes to either get this rule nullified or to get the law changed. That's the Naxo position, and that's what I think.
But why didn't they do that 10 years ago, right? I mean, that should have been started 10 years ago. Now we're going to take a seat at the big boy table, I guess,
I mean,
because now we have problems, right?
What difference does it make whether it was 10 years ago or now? I mean, you said, first of all, it's premature, but then you said it should have been 10. So let's talk about where we are.
I'm giving you the example. It absolutely should have been addressed then, before things were out of hand, right? They're only being addressed now.
Better late than never, right?
People.
Better late than never. So here we are. We've got a big, I think probably a big portion of the population, probably everybody watching this who's in business. They're like, this is ridiculous as far as, what is being asked of us. I think practically speaking, the majority of people watching this would say, I would rather go to war than wait 6 months, I would be out of business. That's the practical reality of where we are, right? So that being,
so they'd rather start a war and lose bodies than to just simply work out a treaty, right?
I don't think we started the war. I mean, the CFPB, the FTC started it with the rule, and the CFPB.
They're not who you think they are, though. That's the thing, is everyone thinks that they're this big, mean regulator that just wants to crush credit repair because no reason. They just don't like it. But that's not it at all. You can see the pattern of their escalation based on the abuses in the industry.
Yeah, but those are all covered under CROA, though, right? I mean, those abuses are covered under CROA. So let's talk about where we are. So where we are is, you've got a segment of the population who's like, you know what, we really weren't looking for a fight. We just want to run a legitimate business. We want to conform to CROA. We want to conform to the state laws. We've got our licenses. In fact, some of these big companies have licenses and bonds in lots and lots and lots of states. They're like, you know what? Enough is enough with the tyrannic. So this is the real world, right? Enough is enough with the tyrannical CFPB saying, oh, but by the way, we want this rule to be enforced. So why, I would ask you, I mean, so let me ask you a difference. So do you think it's legitimate that industries all the time, every time, lobby to get laws changed? I mean, that's a legitimate way that business is done. Can we agree to that?
Yeah. And I think lobbying is highly ineffective because we're spending money with one guy who's going out to Washington.
No, no,
and
no,
to
no, no,
convince
no. No. So this was. I'm not talking about NACSO right now. I'm not talking about
or any of the trade groups for that.
This was
But
just
yeah,
a high level question. So can we agree that the way that industries, part of the way that they control their industries is to lobby and get laws changed or attempted to? I mean, can we agree that that's how business is done all day, every day by businesses?
I would say that when we're talking about like big tobacco, firearms, the big lobbying groups that we are aware of, right? They're already standing on pretty good legal position. They're already in compliance, and now we're down to technicalities. We don't agree that you should make us do this thing, like put a big warning on our cigarette packs or whatever. People already know you're going to die slowly, right? But at the end of the day, they're saying we're going to push back against these individual things by putting a lot of lobbying pressure on these people. But they got teams of people. They're spending hundreds of millions of dollars on this. So I mean, they're very well connected and they're powerful in their lobbying because of the huge amount of consumers that are eating their products, and they're very wealthy.
Well, I mean, I'll give you an example. So in 2013, I went down, so like the state laws that regulate credit repair companies are called credit services organizations. And it's in Texas, and I think a lot of states, that same law covers payday lenders. Ironically enough, payday lenders are covered by the credit service because there's one line in the state law that says if you give advice or assistance regarding an extension of credit, and that's what payday lenders. And in Texas, there's a precedent that they won like 25 years ago that says, hey, we're payday lenders. We're charging them these predatory fees because we're giving them assistance regarding an extension of credit. So a lot of people don't necessarily realize payday lenders and credit repair are regulated the same. And over the past 10 years or so, a lot of those states, and I know here in Texas, have been trying to tighten the noose on the state credit repair law. So I actually drove down to Austin with another credit repair guy in 2013, and we each did a 2-minute testimony before again, this is the state, but the Committee on Business and Commerce in Austin. And they were trying to make some changes to the state law that could potentially, the way it was written, have unintended consequences on credit repair, like saying, hey, you can only give advice regarding certain types of extensions of credit and blah, blah, blah. And we're like, well, what if we get a lead from a mortgage company and we're trying to help somebody improve their score for a mortgage? That could run us afoul. So to your point of, big tobacco and big all these industries, so me and the other credit repair guy go down there we walk in and we go into the Capitol, we walk in the room, and you've got all the legislators on the committee, and then there's two halves to the room. One half has all the payday lender representatives, which they kind of look like the mafia. And you got the other half with all like the consumer advocacy groups that are like there for the poor consumer who's the victim of the predatory lending and stuff, right? I mean, because you got like the poor versus the industry. So I mean, I've seen that firsthand, but I mean, so I think I think we disagree a little bit that you got to have like big money to lobby.
Let me tell you what I think
if your industry is being is being threatened. I mean, wouldn't your natural instinct be, hey man, you know what? We didn't come here looking for a fight, but if we say that we conform to the state laws, if we can show we've got licenses and bonds, if our contracts do conform, and if we don't charge until after the full and complete performance of such service, and these regulators are now going in and putting the full weight of TSR when really there really isn't a uniform, consistent historical precedent of that. I mean, they may have used it before previously, but there is not like this precedent of the FTC going in and really throwing TSR at people like the CFPB. Sure. At what point, so my question, at what point do all these players that look differently say, well, we need to get Matt Hearn's opinion or, whoever's opinion, right? Versus, hey, here's where we are. How can we work together, right? Like, how can we combine here's where we are, man. How can we work past our disagreements and figure out, because we got people watching this, and dude,
I'm gonna give you the 3-minute abridged version of what it is that's necessary to make this thing work, right? Number one, so obviously created Occam a couple of years back at our RevCon event, and we've had regulators loved the the idea and the framework around Occam, they loved it. They promoted it from the stage, right? Regulators. They said, this is the way you got to go, guys. If you want to clean up the industry and you want to get in compliance and you want to make something new happen, this is the way to do it. So a very advanced auditing and vetting process, bring these guys in, a zero complaint tolerance policy. We get everybody into basic compliance first and foremost. Then once everyone is in compliance and we're demonstrating that we've got an effective system where consumers are not being harmed, we promote that material to the consumers. We show them that this is where you go to get quality help, where you're not going to get ripped off. And we hold these guys accountable. From there, with this delegation of advisory board members, we can now go down and engage the CFPB and the FTC in conversations and help educate them on the state and federal level. We do it for free. We do it of the industry, for the industry, by the industry, and we make this thing happen. As far as the 6 months, not waiting to get paid for 6 months, there are solutions available right now to make that happen. And to get everybody into compliance where, no, you're not going to die. You're not going to run out of money. If you're underfunded and you're one of those types of companies, there's going to be a barrier of entry to this industry. That's just what it is. And unfortunately, no, not everybody can just do this business with a couple $100 in a website. You're going to have to be a real company. And if you're a one-man show, fine. As long as you're a one-man company, and you're doing it right, then we have moral high ground and we can start to engage these regulators correctly. But we don't even have the leadership or the infrastructure. So tomorrow, a great example. I don't have to do it. I don't need to do it. I'm throwing a TSR and compliance training because these guys need to be trained on these laws and rules. They need to know what they have to do to comply and what the laws say as they stand, not as we wish they were, but as they are. Once they have a fundamental understanding of that, they can start making some different decisions and help innovate the service offerings to comply and to succeed and to win. We don't just say, we're going to stay back in our little caves doing all the wrong things and start a big fight with a regulator that can easily crush our industry. We need to open the dialogue there. We can't do that until we have that moral high ground. You can't go in and start conversations with the police if you're breaking the laws every day, right? They're not going to listen to you. It's just how it's going to be. You can't go to the judge and be like, I'm breaking all the rules, but I want you to change the rules so I'm not breaking them, right? Because I need the laws to work in my favor. We can't do that. We have to get to that place first, and then we can engage meaningfully. But the Naxo lawsuit was premature, period. It was done because a couple of their key players got engaged for breaking the rules, and now the whole industry is being placed on the radar while this fight ensues over these couple of companies. No solid information has been given as to what the lawsuits are, if there's a lawsuit, is it a CID, what even is it? You're just promoting a fear campaign in this process with a fundamental understanding of how the industry works, how we should be operating, and where we need to go next, right? I'm about solutions. I find solutions out of the chaos, and I see the road forward, but it's going to take a revolution to make that happen. And people are going to have to get real serious about, are you in this game just to make a couple bucks? Or are you in this game to really benefit the consumers and to help this market to right itself? Because at the end of the day, if FICO and the credit reporting bureaus were to correct their issues and find better ways for consumers to interact with that data, credit repair is out of business anyway. That's a real live market business threat. Not fintech could come in and wipe out credit repair by offering services that allowed people to engage that system better, right? So there's a lot of threats to the industry in general, and the regulators, in my opinion, are one of the least of them. At the end of the day, we need to comply. They need to know what the rules are so they can comply. And we're never going to find loopholes, or we're never going to find exemptions. We're never going to find these things if we're not willing to look at it first and say, not, I don't want to look at it, forget the TSR, I just think it's unfair, let's sue. Let's look at what it is, look at why they got there, figure out what we need to do to not just comply, but to comply and outperform in those in that same industry with the same laws. So we have a lot of work to do, and I feel like the messaging is split. Half the industry is trying to go one way, half's going the other way. We're still not dealing with the root issues that are underlying in this industry that are pervasive and causing these types of aggressive actions. So we're just we're in a place where it's either going to make it or it's not. And that's just what it is. And it's going to depend on how many people want to come around and figure it out. But you want to get trained on these laws and how they apply, we're going to go through them letter by letter tomorrow afternoon. So
definitely, and obviously, man, I respect you a lot, man. We've got a good.
But I got a small battery issue here. Let me just address this real quick.
Yeah, go ahead. So for those of you guys who are listening here, Matt's doing a quick battery change and everything, but he should jump back on here in a second. But yeah, man. So, for those of you guys who are watching, this is what it's all about, right? Not everybody's going to have the same perspectives on everything. But how do we, figure out where we are, right? Where we are is, we've got TSR. It's very, very difficult to conform to it and comply to it. For most of us who are in here or small business owners, we would be put out of business. And so on the one hand as well, you've got to do all these things to conform. On the other hand, it's, hey, what can we do to fight back? And so I think that's kind of what it really comes down to. And that's really what we're talking about here. And, hopefully Matt will be able to jump back on. But we've got some questions. Let's see here, some posts that have come up. Let's see, Charles, you say this has been a fascinating discussion, different solutions. Yeah, so Matt, I'm just going through some of the posts while you're getting your battery checked, buddy. So Charles says, this has been a fascinating discussion, different solutions, but these kinds of debates can be helpful. Yeah, I mean, and that's true, right? Lyle says, this blocks many smaller entrepreneurs out of the marketplace. True, too.
Yeah, it is.
Deb
Absolutely.
yelled at me for talking over you. I'm sorry, Deb. I let Matt finish. But so, definitely there's two different viewpoints here. I mean, for sure. And, you've got kind of your compliance perspective, which, I mean, I think we can it is very difficult for the average business to do that, but that's what your deal is. And then you've got
the other side. So real quick, I'll pause you really quick. So yes, compliance is definitely the hallmark, but it's because I believe it's the key to success, right? I'm a businessman and an entrepreneur first. So I understand business and I understand what it takes to exist in business, right? There's been businesses that I've looked at before that are super regulated and require huge amounts of capital just to get into it. And by the time I pencil it all out, I look at that business opportunity and decide whether or not it's going to be profitable enough for me to want to invest my time in it, right? And there are plenty of businesses I've looked at where I've said, it just doesn't pencil, right? It's not going to be as profitable as I'd like it to be for the amount of work I'm going to put in. And that's a part of the situation too. But we have to be solution oriented, but we can't be solution oriented until we first come to a point of reckoning where we can look at things the way they are honestly, right? And we were touching on it a little bit earlier, just in regards to the way the government looks at, or the way the regulators look at this industry, being that in their opinion, because the lenders and the creditors, right, and the credit reporting organizations also have an opinion about credit repair, right? So all of those things are in play, and they believe that we are artificially inflating and creating profiles that don't accurately represent that consumer's, lendability, and we're basically now causing harm to the lenders by blinding them from the reality of those credit profiles. And it's not because everybody's doing it this way, but if you go online and you go into these groups, and you guys that are watching know this, it's horrible what's out there. 750 in 90 days, 800 in 6 months, or whatever it is, all these increases. We'll do a full credit sweep. We'll remove all your derogatories. That practice is in play, and they're using your tools and other people's tools to do it, right? So the information is right, but the players that are using the information aren't right. so there's that's a big deal, but we have to look at it. We got to really look at it and dig in. Now, I'll tell you this just as a little tidbit, right? This is the kind of thinking that I think is necessary. I'm reading these laws and these rules over and over and over and over and over again, and looking at the lawsuits and comparing and figuring out what's the angle here, right? And there's one angle that I found that I thought was really interesting, that I thought it seems pretty glaring, but maybe people aren't really seeing it, right? 6 months you're waiting to get paid, yes? And what are you trying to verify at the end of that 6 months? What's the catalyst for getting paid at that 6 month mark in that language? That was a question.
Pull their credit report, and then you need to be able to pull a fresh credit report after 6 months and validate that you raised their score. That's what it is.
Validate that you raised their score, but that's not in the language, right? In the language is that the promised results were obtained, yes? So, Steve, here's a really glaring, blatant question. What if there isn't anything being guaranteed? What if there isn't anything being promised?
Well, that would be Yes, I mean, it's a fair question, but that would be a violation of CROA because CROA spells out what your credit repair contract should contain, and part of it says you need to spell out what your guarantees are. And it further says if your
But
contract
those guarantees don't have to be a percentage. They don't have to be a promised result. Those promises can be that I'm going to do the work to remove these inherent items, right?
You answered your own question. So that is a guarantee, right? Because you had said, well, what if there is no guarantee? But CROA says you must spell out what your guarantees are, right?
Right. So I totally understand that.
So
But I'm just saying that's just a small example of like the ways that we should be looking at some of these rules and regulations and making determinations on really what are our angles? Do we have any angles? And if there aren't any angles after examining that law, then that means we got to comply with it, right? The way that it is.
So as we kind of wrap it up, though, I mean, I think there's a way. So if you're trying to share with people how to conform to the rule as it currently is, I think that's an amazing thing. Okay, I mean, because there's nobody who wants to willingly not conform. Okay, so kudos to you, totally support what you and what Occam are doing and saying, hey, so we've got TSR, and from your perspective, you came from the debt settlement world, you were in it when that whole world got shook up. And so I totally respect what you're doing, saying, well, here's what it is, so here's how you make it work, which is very tough. And to your point, you can't name any companies that currently are conforming to it. So there's that one side, which is, okay, well, this is what it is. You're going to share it with people. Then there's the camp of people who are like, you know what, we don't think that this is the way things should be. And we have not had a seat at the kitchen table. We've been on the kitchen table the entire time. We weren't really meaningfully there when TSR was originally passed prior to CROA. We weren't really meaningfully there when CROA was passed in 1996. We weren't really meaningfully there in 1997 when all the state credit service organization laws were passed. We weren't really meaningfully there in the 2010, 11, 12 era when the TSR was revised. And so, here we are. I think a fairly large section of the population, especially the credit repair companies that have a lot to lose, right? They're like, you know what? Enough is enough. We can't be held accountable for those. There's always going to be, new guys popping in and, the bandit signs and the sweeps, and it's absolutely terrible. But there's that section that says enough is enough, which I respect that. And that goes into kind of my pre-litigation philosophy, which is sometimes you got to litigate. I mean, my story. I've had dozens of clients sue the bureaus, and man, if I listened to the people that told me I couldn't do it back when I got started, I'd be listening. You can set precedent, right? So,
Totally.
As we kind of wrap it up, like I think there's a way. I mean, rather than two worlds colliding, I mean, I really do feel that there's a way if we can kind of put whatever differences and stuff aside and say, hey, you know what you're doing is you're saying here's what it is, and so unless it gets changed, here's what you need to do. And there's the people who are like, you know what, but at this point we're like enough is enough. So how can these two worlds play together and say, you know what, and combine our resources? Because at the end of the day, it does affect everybody. And again, to your point, you don't know of anybody who is meaningfully compliant at this point. And so it's a real issue. We've got to,
But let me say on a positive note, I've seen a lot of people that are doing some really good work. They're making strides to, number one, at least mitigate enough of their risk, right, as possible by cleaning up their advertising and marketing, cleaning up the way that they sell their product, right? Because a consultative sales approach is the only way that this we'll call it service can be offered. None of this benefits features crap that got the settlement industry and all these other industries into trouble. We can't be pitching these pie in the sky ideals. We have to really do a consultative sale where we're really helping the client understand what we're doing, why we're doing what we're doing, and obviously facilitating them, right? So I see a lot of great positive things coming from these discussions. People are starting to recognize that we've got to clean up our act a bit. I got to get myself licensed. I got to get myself bonded. I got to adhere to these rules and do this thing the right way. That's awesome, right? Those are people that really want to see the change made. But I think in leadership in general, this is where it becomes very critical. And I've had this said to me by not just regulators, but others that are in leadership involved in government things. It's the character and integrity of the leadership that's going to determine the course and trajectory of the industry. And so if you've got players that are out there being a leader and promoting bad behavior or have bad character or bad behavior themselves, the credibility isn't going to be there for them to really meaningfully engage. Because think about dealing with a regulator or any law enforcement official for that matter. If you've got holes in your story or you're not a good person, like character, integrity, the things that, you know, when you run a business, you're not going to be taken seriously, right? At all.
Details, huh? Character integrity is small details.
Right? And I'll tell you right now, the thing that I've noticed, and trust me, I've looked and I know all of these guys in general, but I know that there are a lot of people, and I'm just going to leave it very generic in this, people involved in leadership within some of these organizations out there in the world that are running completely fraudulent businesses side by side and hustling the networks and leveraging these organizations to get themselves rich, you know, and they're doing it wrong. So then when those people have to step to the table and they're going, well, wait, but you're also running this other company that's doing this totally illegal thing, and how do you have some kind of moral high ground to even engage us? Like, and you, with that level of character, are running all of these people, and you want me to take you seriously? It's not going to happen, right? It's not going to happen.
Yeah, and so, and obviously, I mean, you know, you've got your difference of opinions, and you know, everybody's got this thing. But you know, so no, you know, I'm putting it nicely, right? But you know, at the end of the day, forget about the leaders and those things, right? I mean, we've got a large section of the credit repair business population that is saying, you know what, enough is enough, right? I mean, that's a fact, okay? And it's been enough for a while, but because NACSO has had a lobbyist for many, many, many years. And I mean, so from that perspective, it's not like this thing just popped up overnight, right?
No,
so
it's true.
There is a segment that says enough is enough. We've never participated meaningfully, and at this point, you know, we're done. And then there's the segments that you're helping as well, which is like, hey, you know what, but here's where it is. So, you know, forget about the leadership and these things and all that. Let's talk.
I like that. I think that's very important though, because you need to have, I always say that there's wisdom in the counsel of many, right? You have to have a very diverse and very wide angle lens on information when it comes to something that's going to potentially crush your business or allow you to flourish, right? So that's very important. And if all of the people speaking a specific message all have one agenda in common, it's very difficult to know that that information is unbiased and that it's well-rounded. You need information. You need information from as many resources as possible. Right now, we got 500 coaches out there, 500 mentors out there, 10 different leaders out there, and they're all pulling their networks of people in different directions. So we're in fact scattering, and then the only rally point that's happening is in the one organization that's there operating without any real checks and balances. So I think, you know, we have to rally as an industry. Absolutely, we need to look at our business models. We need to determine whether maybe our business models as they are is ineffective. Maybe we need to change our business models completely and change how we offer services, how consumers can obtain those services, and how we deploy those services. And those are things we've never really done because everybody's following someone else. So if this guy's doing his credit business this way and he's promoting to 10,000 people to do it this way, this guy over here is doing his business model this way and promoting that this is the only way. Now we've got 200, 300, 400 different business models in play. None of them are consistent or uniform. So a consumer is going to get one message and one set of services from one company that's going to be completely different set of promises, you know, services and otherwise from this other set of companies, right? So it's like, well, what's real? How does the consumer know what's real? Well, that's really one of the many fundamental problems at play. We've got to rally up and we've got to start getting some standardization, some uniform behavior. We got to have a reasonable code of conduct that everyone follows and start to create that uniformity, right? And then,
well, I mean, so we've got the frameworks, right? We've got the state laws, we've got the federal pro, you know, and part of what makes a free market work is diversity, right? So I mean, as long as at the end of the day you're not charging until the full and complete performance of such service, you're conforming with the federal law. So I mean, again, back to kind of my point, you know, there's a large segment that says, okay, you know, we've bent over backwards for everybody and everything. We respect the power and weight of the federal government, but enough is enough, right? If they're going to literally come in here and say, you know what, after 25 years, they're going to shut me down, they're going to shut my merchant services down, having a website constitutes telemarketing and I can't get paid for 6 months, I am ready to go to war, right? So I mean, that's kind of where we are. And we've got a trade association who has filed. So my question would be, how can we, right? I mean, this is where we are, right? So how can we, to your point, rally together, right? I mean, it seems like it's kind of a win-win because, I mean, you're the only guy I really know who's out there saying, hey, here's what TSR is. And yeah, it's pretty damn draconian. But here's here's what you have to do, right? And so I appreciate the fact that you're putting the message out there. But we both know that is not a recipe for a successful and healthy industry. Something has to change. I mean,
No, I agree. And I think too, part of it is that money is in the way. Money is creating the agendas that are at play. There are a lot of voices like mine. I happen to be probably the most prominent because I've been in the space since 2000 and a leadership.
And I like your voice, by the way. You've got a really good tone, by the way. Were you like one of those opera singers back in the day?
No, I wish. You don't want to hear my voice like that.
Oh, okay.
Maybe you do. It's pretty good. But no, but there has to be an allowance for other voices to enter the conversation. And at this point, it's always been a polarized environment because the message may not always fit the agenda of those that are literally pioneering and driving these industry-wide actions forward. And so until that changes, I mean, there's really nothing we can do other than understand that we're going to have groups that are going to be polarized. And if that's going to be the case, and I'm looking at a huge group of my friends operating in this business and doing it really well, and are looking at me saying, how do I get myself into compliance? How do I make this leap? And yes, I got caught flat-footed. Yes, I didn't pay attention, and I should have. But nobody's been talking about it. Now it's a problem. What do I do? And I'm saying, perfect. That's a great starting point. You're ready to make those moves. But I'm going to drive that segment of the industry into another organization, another platform that's going to do the things that I believe the regulators want to see. So there can't be any kind of emerging unless both parties are willing to sit down and go, you know what, this is where I think we've gone off the rails. This is what we need to do to survive. Because I'll tell you what, I believe that in a perfect world, all of these things could work together so perfectly. The regulating arm, the self-regulating, self-policing arm, that infrastructure, that rebranding, that is like a fresh place to start from a place of moral integrity. The other side has already been through its damage. It's been 10 plus years, like you were saying. Something's got to give because you can't go somewhere new with old eyes, right? If you're still thinking the way you've always thought, you're never going to get somewhere new. If you want to go somewhere new, you got to change your thinking completely. And you got to say, I'm going to look at this a different way and I'm going to go that way, right? And that starts the trajectory into a direction of change. And that's where we're going to have to go, because I'll tell you what, it's my prediction that the judge is going to come back and say, just like the PMH lawsuit, opinion, whatever, they're both in play, guys. Sorry, they're both in play. Figure it out, and at that point, enforcement is going to get really ridiculous and people are going to lose their businesses. So unless we make moves now, to prepare for it, right? Prepare for the worst, hope for the best. Make the right moves, create the right strategies moving forward, put that pressure on if you want to buy yourself some time. But what are you doing with the time that you're buying, right? How you spend that time is really, really important. So we want to spend that time reforming the industry and getting it in a place where it can stand in front of the media, the government, the consumers, and say, we are doing this well and we're doing it right. And here's how we can prove that. Not because we say so, but because we've demonstrated it by creating an ecosystem that only pushes forward the good players and holds the industry accountable, right? That's
yeah, man. And you know what? There is no disagreement. Like, our industry is a cesspool of non-compliance. And you look at these, what they call the credit suites, the FTC, the fraud affidavits, where people are committing fraud by using fraud affidavits and fraudulent police reports. I mean, it's disgusting, honestly. So, I mean, honestly, I think it needs to be a two-pronged approach, right? I mean, because you can't like wait for the industry to get cleaned up before you say, we're going to try to take this into our hands. And you know what? We think this is unjust and we're going to sue somebody or get a law change, right? Like, I think it's two things need to be happening in parallel. So like, you're training people about TSR and teaching them. Our industry is a huge cesspool. and that's why it comes to us and people like you and me, and I mean, everybody. We've got to have the
Being with
dialogue, right? The
reason,
worst
right?
thing that can happen is people
Yeah.
are like, "F you, F me, F that," and all this kind of stuff, because that's how we
Yeah.
got to where we are, right? I mean, it's good to have meaningful, uh, different viewpoints, but you know, I don't think. I think it would only be good for your organization, for OCAM, and for your position. Let's say the judge came back and was like, Naxo, you lose. Everything stays the same. Okay, from my position, well, everything stays the same. We've not won anything, but we haven't lost anything. I mean, because it can still go to appeals, and then we can start lobbying. And so let's say the judge says, hey, Naxo, you lose. Both TSR and CROA work in parallel to each other. Okay, well, that doesn't really meaningfully change anything. That just says, okay, this particular judge says it is what it is, which, is good for your position of saying, hey, here's how you guys need to operate under TSR, which is literally either meet with people in person or don't have a website, essentially. I mean, kind of facetious, but I mean, essentially that's kind of where it is. And so, and if the best thing that can happen is at some point we make meaningful change in the TSR or CROA, either whether it's through this first round of litigation or through an appeal or through combinations of that and lobbying. I mean, so, if there's a way where, we can take both perspectives and say both are vital and important for us as an industry to survive. There's got to be folks like you who are saying, hey, dude, TSR has been around for 25 years and you guys are all out of compliance and here's what you need to do. Like, I think that is super important. And then to be able to say, hey, but you know what? Like, we're committed to doing whatever it takes, because in our core, we feel like TSR is a bunch of BS, honestly, right? And it's draconian and it's overreaching and it should be superseded. And these prior courts who have said that, they can play well together with CROA, we believe we want to set our own precedents. And I don't think there's anything wrong with an industry and people saying we want to set our own precedents, right?
Yeah.
So, I mean, that being said, I mean, how can we kind of, as we kind of wrap this up, I mean, how can we play well together and, really fight the good fight together, which is really what's needed, right? On both sides of the front, on your front and on, the litigation front.
Those are really great questions. I think dialogue is absolutely essential for sure. But when you look at whether or not this, and look, I don't necessarily agree with the TSR amendment as it's in play either. Matter of fact, in 2010, I was a strong proponent against the TSR amendment because it's not about how or when the fees are collected. It's about whether or not the service is being fulfilled and the consumer is happy with what they pay, right? At the end, if there's an amicable, meaningful transact, consumer and seller, there's really no issue. If you're happy with what you're selling, I mean, I might pay $50 for that pool table behind you, but another guy's going to come in and go, oh yeah, this is worth $5,000. I'm going to pay you $5,000 for it. Well, as long as he's happy to pay that and you're happy to sell it to him for that, everyone wins, right? And if the table is what you said it was, right? So at the end of the day, no victims, no crimes, kind of the way I look at it. So my advice to these guys is let's start with the stuff you can fix. Make sure you're in compliance with state laws and your registration is correct. Your contracts are correct on a state level. You're adhering to CROA as strictly as you possibly can. And then you clean up all your advertising and marketing, because that's the place that is going to get you caught, right? That's where you first get on the radar. Because if you're marketing to a consumer, you're marketing to a regulator because they're a consumer. They're seeing everything you're posting. You can't hide, right? So if you can stand behind all of your marketing messages and you can say, I didn't make any guarantees, I didn't make any claims, I didn't overinflate what it was I was offering as a service or the result or any of that, that's the starting place, right? Because that gets you now looking at your material with a compliance eye. From there, the big one is the TSR. How do we comply with the 6-month thing? That's going to take some time to get there. But for now, what you can do is mitigate your risk as much as possible by not becoming a target. Number two, make sure that you're resolving every one of your complaints amicably, like quickly as possible, so that consumers aren't crying foul and complaining to a regulator that'll put you on the radar. Make sure that you're licensed correctly. And if you're operating in a state that you don't live in, you have to register as a foreign entity in that state so that the state knows you're in their state doing business with their people, right? So there's a lot of these little things that people don't even understand, much less can comply with. But if you start there, that's going to start on the road to healing, if you will, on the road to compliance. That's how we're going to eventually get there. Then if we start preparing for the worst by setting up this SPA system, by getting these key components in place and preparing for it, when and if that thing comes down and says both rules apply, comply with them both, now we have a system in place that we're ready to start complying if necessary. And yes, it will mean a lot of smaller businesses going out of business, but maybe it won't. And maybe some of these smaller businesses will decide that they're going to be face-to-face local companies that are going to have their name and reputation placed on the services they provide and on the claims that they make. And that, I think, will be extremely beneficial for consumers.
Well, I think large businesses would go out of business more than the small ones, because the small ones are the ones who are out of compliance, not necessarily through any fault of their own. Case in point, everything we've talked about. The big ones are the ones who are on the radar. And if they've got to go 6 months without cash flow, and they're not going to go and get a $1 million loan or whatever if you've got a bunch of employees for payroll. So, but at the end of the day, I mean, I think, NACSO did kind of lay some foundation before this. I mean, there's a letter attached towards the end of the lawsuit signed by 4 congressmen, basically saying, hey, CFPB, the rule that you're trying to enforce, we as congressmen believe it should be superseded by CROA. So, I mean, I think, so I just, in the interest of saying, did this thing just spring up overnight? I mean, this is the kind of thing that we think it's unfair and we're ready to go to war front.
Yeah.
This is something that they have been working on. I know some of the leaders from NACSO, they have met with the CFPB. I haven't, it's been years since I've been to DC. I mean, like I said, I've been a NACSO member for.
I've got a question though. It's an easy breezy, but I think that your people will really enjoy this question, right? If you could comply with the TSR and the no advance fee portion of that rule, right, and still get paid within 30 to 90 days, a percentage of that fee, would we even be having a discussion about it? If you could comply with the TSR and still get paid now, would we be discussing this at all, right? Or would this even be something we would be fighting over, right? At the end of the day, I'm talking about the government and what have you. My proposition is, number one, I have a bank. Do you guys want to buy a bank? You want a bank? I have one. I have an SPA bank. If literally, it's for sale. So it's there. So the piece is there that you need, right? I also have venture capitalists, private equity groups, and liquidators that would love to come in and lend on that to the business owners and pay on receivables, right? And maybe it's a scenario where they're, if you get one payment in on your 6 months worth of payments that the consumer is going to pay, maybe they're going to pay you 30% month one on it, right? Of that. Then they're going to collect the rest over time. If it's 2 months, you'll get more. 3 months, more. The longer you're willing to wait, right, the more they're willing to fund you on it, because it's more of a guarantee that that's going to pay out, right? So they make money by factoring you. And if the dollar value of that service was higher, so that the amount you're getting cashed out on a smaller percentage up front is what you would have realized anyway, then now you can focus on just doing your business, right? Doing the business really well. And you can not worry about whether or not the TSR.
Well, I mean, so I hear you. And for those who don't know, so factoring is when you basically, let's say you've got $1 million in invoices, but you're really thin for cash flow. This company may give you, $920,000 for your $1 million in invoices. So they're buying your invoices up front at a discount. But most businesses that need factoring is because they're either in high growth mode or they're super thin margins. The scenario that you're painting a picture of is an industry that would need factoring, literally because there's a rule that says you can't pull your money for 6 months. And so that's not really and so I think the marketplace would say, hey, you know what, at the end of the day, this is too much of a pain in the ass. And again, the reality, neither you nor I can run away from it. We both agree completely to, is that you're still gonna have all these new companies jumping in the industry that just don't know, right? So none of this really fixes it. And I mean, it's a great proposition, but that's not really why you need factoring.
But if there's a critical mass, right? If people really start to utilize that system, Settlement did it. They flat out did it, and they made it work. And they're all, the ones that exist now are winning. They're making money. They're adhering to the TSR. They're performance-based companies, right? That's what they call them. No advance fee companies are called performance-based companies. So if your business model was a performance-based model. You're not going to pay me unless I get the job done, right? No fee unless we win, right? Those are the attorneys. So there are attorneys.
Well, and I think part of it too, because when you factor, the factoring companies actually look at your the risk of your vendor, not really you, right? Because they want to know that the invoice is actually going to get paid 30 or 60 or 90 days from now. So in this case, if you still have a TSR that says it's illegal to actually receive this money for 6 months, from a practical perspective, I find it hard that anybody would say, oh, well, this is such a low level of risk that we're going to factor this thing, right? I mean, so there's good theories, it's good ideas, but I think
it'd be insiders, right? But at the end of the day, that's what I'm saying is these are the types of conversations we should be having and thinking through some of this. Like, how do we comply? Because if it comes back and you say we haven't prepared to comply, now we're at a real serious impasse, fast forward, where they say, yep, this is what it is. And now we're going to choke the processors. The processors say they're not going to process for credit repair anymore. Now it doesn't even matter. The conversation's null and void. The law is the least of your worries. Finding a bank to process your payments is the worst case scenario, right? So that's where it's going to head. Eventually, they have enough tools in their arsenal to really end this. So they're herding us like cats into a corral where they believe it'll create a safer environment for consumers. So if we know that's where we're headed, then let's try to figure out the best ways to make that as seamless a transition as possible, rather than waiting until the sky falls on us all and everyone goes out of business overnight. And make no mistake, it doesn't matter to me, okay? At the end of the day, and this may sound terrible, but if credit repair went away tomorrow, it doesn't affect my business or my money. If debt settlement went away tomorrow, it doesn't affect my business or my money. So I'm not affected by the ebb and flow of these industries. As a matter of fact, I don't even have skin in the game to say, look, I'm going to be this preeminent trainer in the space. Look, I have so much consulting business that it doesn't even matter. I work with big companies. So I don't even work with all these small guys. And I'm lending this information because I see where they're headed. And I watched my other friends go through it. And I say, look, this is how you got to go. You got to go this way. At the end of the day, if you guys get shut down tomorrow, it doesn't change my life at all, other than I have 5 less alerts on my Facebook posts, whatever. I got less of that. So I'm trying to help people really see it. And that's why I'm known as sort of the black and white, no bullshit guy. I'm going to tell you how it is. I'm going to call it. If I see something going awry, I'm going to check it, right? I don't mind speaking truth to power, right? So if I see something over here, I don't care who they are. I don't care how long they've been in business, how many millions of dollars they think they have, whatever. If they're doing something wrong or the character isn't there, I'm going to check that behavior and say, oh, whoa, wait a second. No, we're not going to let that slide. I'm going to speak to you about what's real here and not just about what you think or feel, right? Emotions lie.
Yeah, so, as we kind of wrap it up, I mean, can you agree that if TSR, if basically TSR were to be known, if it were to be basically it is invalid pursuant to CROA, okay, if that day were to come, would you agree that would be a good day for our industry?
I think they would have to make those same accommodations for the other industries that are under that same type of pressure. And I think it's going to become bigger than that. It's like the smallest string in that arsenal being strummed, but yet there's all these others that would then say, well, wait a second, if you're going to do that for them, what about us, right?
Well, credit repair is the one carve out in TSR that has the 6 months though. That was
the question. I'm going to tell you why TSR is becoming a thing. It's because CROA is ineffective at reining in the abusive nonsense that's going on in the space.
So, okay, so we can agree that if it were to get ruled or a law were amended or whatever, where CROA supersedes TSR, you would agree that that would be good for the industry, right?
So I don't necessarily think that, okay? So yes, in the financial side of that, business-wise, it would be great, right? But what we have to look at is the fact that CROA has been used by a lot of these bad actors, and they're complying with CROA, yet they're collecting these exorbitant advance fees, not providing services that they need to provide. There's the same problems will exist under that rule, and then that rule will get adjusted to appropriately protect the consumers from that behavior. So instead of companies complying with CROA, They looked at all the possible ways that they could translate CROA to still keep the money flowing and keep doing the things that they're doing, right?
Matt, were you in the debate class? Like, were you at high school, like the debate king over there?
No.
I thought I asked you a simple yes or no question, and you're giving me this dialogue on how if TSR were suddenly considered to be invalid tomorrow, it still would not be a good thing for our industry. So
the industry has more problems than just getting paid today. The industry has way more
it has a lot of problems. But I mean, and I hear what you're saying. But I mean,
Yeah.
all kidding aside, though, I mean, if it came to be where TSR was said, it says, you know, hey, the law of the land is CROA for this industry. We can agree that that's good for our industry, and we can agree if credit repair companies are conforming to CROA, consumers have more protections than almost any other industry. We can agree to that, right?
So I hear what you're saying, and I agree that yes, if CROA were the law of the land, then if TSR did not apply, it would be great for businesses, right? Would it be great for consumers? I don't think so, because we have so many underlying problems in the industry that have to get addressed also. And so if all of a sudden the money's there again, right? Change only happens after pressure, right? A lot of the industry didn't want to change until all this pressure came down. Now that there's pressure, now they're looking at it going, okay, I'll do what you say, right? So the regulators are doing a great job. They're applying the right pressure, and it's causing people to want to change. So if they said that pressure is immediately relieved, would it solve the underlying problems? I would say it wouldn't, because until there's a reclamation.
Our whole conversation, we've agreed that TSR has been largely just ignored by our industry. Most people don't even know what it is. So it's really been a moot point for the entire consumer experience. And CROA does prohibit charging until full and complete performance of such service. And if your contract doesn't conform to CROA, CROA says that it's an invalid contract. I mean, and it requires 2 notices of cancellation and 3-day rescission periods and disclosures. Yeah. I mean, so the consumers have more, I mean, it's an anti-deception law is what CROA really is, right? I mean, so they've got more protections built into that. So so to your point, if all these companies are still operating rogue under CROA, then they can very easily get shut down under CROA by the regulators, right? So without
CROA will become more restrictive, you know, they'll amend it.
I mean, I think TSR kind of hurts. I mean, in the big picture, it kind of hurts the regulators, because when you start going to Congress and stuff, I mean, and you look at people with half an eye, they're like, dude, this is such a draconian rule. And yeah, they carved out your industry and there's a law. I mean, it's not like the regulators are just going in trying to enforce an anti-deception law. They're saying, oh, but yeah, this industry really shouldn't be collecting money for 6 months until after, right? I mean,
it should be, yeah. But what if they come back and they say, yeah, the TSR, yeah, you're right, they're overlapping. So here's what we're going to do. We're going to just amend CROA to have that provision written in under the fee collection portion of CROA, you know,
yeah,
as an amendment.
So that's good. So that's why we are where we are, because we've got an association that has had a lobbyist. They've already got letters from multiple members of Congress, basically. I mean, so there's a foundation that has been put in place. So
are they posting those?
Foundation to lobby, so that when you said, what if they amend CROA, and that's a key part, I think, of the conversation, because it's always been they is how we got to where we are. Yeah. We haven't been part of the industry, but now we're not going to let the theys, like, if we're going to be able to have a say-so in the deal, we're not going to get an amendment to CROA without us having a seat at the table this time around. And I think that's an important distinction.
I mean, that sounds good. I would like to believe that would be how it would work, but I'll say too, just between you and I, what's really important
between you and I and everybody watching. So just, you know.
Anyway, sorry, everybody watching. But what I'm saying is, like, when you go on Facebook and you see these memes and posts and people are saying certain things about what's going on in state of affairs in the world, right? So much of it is false nowadays, right? That you got to fact check everything. You got to just double check, verify. People say stuff and you go, yeah, that's what it is. And then you find out later it wasn't what it was at all. And then you jeopardize all your credibility to go and regurgitate a bunch of material that was actually false in the beginning. So I always verify and tell people, just verify information. Ask those harder questions. Get to the bottom of the why. Once you know the why, it's much easier to find the solutions, right? But you have to know why something is happening first before you can correct the behavior to make it different, right? So, you know, I would say I don't, this is just what it is, right? I mean, I hear like, well, we've got 18 congressmen that we're talking to, and they agree with us, and they sent us letters. Where are those letters? Produce those letters. Let's have a look at that, right?
They're
I want to
attached to
see
the
that.
lawsuits.
I want to see all of it, right? I mean, you can't say something unless you can back that up with empirical data of facts, right? So,
they're attached to the lawsuit against the CFPB. They attached them as exhibits on the end. So
yeah, but what I'm saying is it's that and trust me, I will look through that and I will have a gander at that and I will see who we're talking about and what's happening there. But I've heard so many things said that I just literally, like, for those of us that have been in the space a long time and know the truth, we sit back and we see these things online and we go, wait, what?
yeah,
Wait, that's total BS, right? Yet everybody's buying into it and they're making decisions that's going to absolutely devastate their business if they don't get it figured out. So what are you showing me here?
So this is a little screen share for those who are watching. We'll make it a little bit bigger. So yeah, this is attached to the end of the suit. And so this was dated November of last year. And so basically, it's a letter to them and you guys can read through it and the suit's posted, but it's signed by these four Congressmen: Blaine, Lutkmeyer, Denver, Lee Riggleman III.
And what does it say?
And Ted Budd. So anyway, I mean, it's it's a start, right? But
what's the bulk of the content? What is it saying?
Yeah. So basically, what it says, well, let's kind of read through it. So Congress passed CROA in 1996, and since its effective date the following year, CROA has regulated the activity of credit repair organizations. CROA made important strides to protect consumers, including a prohibition on consumer billing prior to work being conducted on a client's behalf. We understand the Federal Trade Commission, which enforces CROA, instructed credit repair organizations and consumers that CROA is the law of the land with respect to billing regulations. Okay, so they're saying that the FTC has said that CROA is the law of the land. And it goes on to say, so this letter is to the CFPB by these four congressmen last year. So it goes on to say,
when did they receive this letter?
Yeah, this was from November of last year. Let's see, or September, November 7th of last year. Okay, but so the congressman wrote this to the CFPB. So it says it has come to our attention that the Bureau has recently assumed a new regulatory approach to credit repair organizations' billing practices through enforcement with no prior guidance given to the industry. It appears the Bureau now attempts to subject credit repair organizations to an interpretation of a single clause in telemarketing sales rule, which was implemented via rulemaking process by the FTC and before Congress passed CROA. The Bureau's interpretation of TSR would prohibit a credit repair company from billing its consumers for 6 months after completion of work, an extremely burdensome requirement for the industry. These dueling mandates seem contradictory, with CROA's standard being the most recent and derived from congressional authority. One would assume with regard to CROs, the TSR is no longer operative, but the Bureau's recent actions suggest at least confusion. Financial companies have a responsibility to abide by the law of the land. Regulators, too, have a responsibility to clearly articulate for the companies they regulate the legal standard by which they will be measured. We expect the Bureau to provide American business with guidance, due process, and regulatory clarity. While the Bureau's policy development with respect to CROs' billing requirements predated your arrival at the Bureau, this was written to the Bureau director, I think, we ask that you provide us with specific examples of formal guidance provided by the Bureau to CROs that clearly articulate how a modern CRO operationally complies with the billing standard in the TSR and demonstrate that the billing standard in the TSR, not CROA, has been and is the controlling law of the land. And
right.
So, it basically says, hey, regulator, you're providing at a minimum confusion to this industry. Please provide some clarity. And, we have not received any clarity from the CFP other than continued lawsuits to companies.
Sure. And these are pretty easy to get your hands on too. But what I'm saying with regards to this specifically is in these political environments, you're going to see a lot of this stuff going on because Congress is divided in a lot of ways. So I always say, look, you can lobby all day long and you can get a couple of people to really hear your side of it. You think, yes, we got some results, but then those lobbyists work their $100,000, out of walking the halls of Congress, and then the administration changes, and those people change, and they're involved in other things that now supersede whatever it was you whispered in their ear the last time around, and they got 30 other lobbyists with bigger dollars. At the end of the day, we got to get to the tip of that where we're dealing with regulators specifically, and then we're engaging the rules. My fear is that we're going in with this ragtag group of non-compliant people with a varied degree of character and integrity in their businesses, going in and representing the entire space, right? And no, I'm not digging at Robbie. I love Robbie, okay? Robbie and I we're good. I give him a hug every time I see him.
A bro hug, huh?
I love him as a human being, but I'm not a yes guy. So if I see something I don't like or I don't agree with, I'm going to say it, right? Some people can handle it. Some people can't handle it. I think
you're a stubborn guy, man. You're stubborn as a mule. That's okay.
Get your rhino skin on. Look, I'm not easily sold. You're right. I see it from too many angles, and I've been a part of this space for way too long. Early 2000s, I've watched this whole thing play out. And I would tell you, if we sat down to a bottle of Blanton's and I were to share what I know about how things have played out over the space, you'd put that tinfoil hat on real quick.
Let's go fly up to DC and man, let's just you and I together. Let's grab a drink the night before and let's go.
Oh, how about this?
Dude, let's
Talk
go.
about DC.
Dude, let's.
We already have.
Let's go to the CFPB director's desk, man. Let's sit at the CFPB's guy. Let's tell him what we think.
I agree. But we've already been invited. Occam has been invited to bring a delegation of its respective advisory board members to come to Washington and sit down at the table with them and FTC components. We have that invitation as open season. But bringing the right people to the table is what's really important. People who haven't drank the Kool-Aid, they are not, bent on any one specific what do you call it? Ideology, right? That they're willing to look at all of it and they can speak really intelligently to the regulators from both a consumer standpoint, from a regulator standpoint, a state and federal standpoint, and a business standpoint. We got to be able to look at all of that and say, how is everyone going to benefit from us doing the things we're doing? And how would these changes further enhance our ability to really serve the American people, right? So that's really where we want to go. But listen, I got to cut off. I got another hard stop coming. Yeah. But let's continue this conversation because it is a great spirited conversation.
We've got 70 Facebook comments. It's amazing. I mean, it's a good topic. And I know you've got a hard cut off. And so somebody had asked, hey, what are the trade associations? And obviously there's NACSO, National Association of Credit Services Organizations. They're the one who filed the suit. You've got your own association called ACAM. Take just a quick minute, quick plug for what you've got. And how can people get in touch with you, Matt, and learn more about what you do?
First things first, if you want to know about me, you can go to waymaker360.com and you can find out all about me and my background and all that. As far as the Occam, you can go to occamalliance.org, which is OCCAM alliance.org, and you can just read and you can get an idea of what it is that we're creating in this ecosystem. And we've got big changes happening. We've got a lot of moves being made behind the scenes. I'm a lot like an alligator, I think, in some ways. If you don't see me on the shore, I'm definitely in that water, so you should not be going in that water. But no, when I go quiet, it's usually because we're really busy and we're making a lot of moves. But that's what we got to do. We got to rally the right people, create the right scenario. We got to drive this thing forward. But the goal ultimately is to create a compliance ecosystem so we can showcase the companies that are doing well. Right? If you were going to put your mom into a credit repair organization because she needed credit repair help and you weren't going to provide it, you'd know on the top of your head the top 5 guys you would trust to get that job done for your mom. So we're going to be that platform.
I'd have to fire her for being my mom if she's got bad credit. I can't help my mom with credit, man. You know what I mean?
Yeah. But if you could go somewhere and you really knew that you could trust those companies, that's what we're creating. We want to showcase those companies and drive that consumer traffic into those companies' hands because we know that we're going to hold them accountable and enforce it. So that's
awesome, yeah. So we'll let you go. Lyle's posting. Can we put them in a chat? So yeah, I'll chat up a link for Occam. I'll chat up a link for NACSO. And man, I appreciate you being part of it. We've been on for like 2.5 hours, dude. This is crazy.
Oh, we can do this all day, bro. We'll do it. We'll do it another time. We'll have to set up a secondary with a bunch of questions. So let these guys ask all their questions.
That's it.
And specifics. We'll just make a huge list, and then we'll only go through those items.
That's right.
Only.
Pinky swear. We're only going to do what's on the agenda next time, right? So
Right, there we go.
awesome, man. Well, that being said, man, Matt, I appreciate you for joining us. And those of you guys who are watching, appreciate you guys watching us, being part of the group and being part of the change. As we can see, it takes all sorts of ideas to make it go. So that being said, we'll see you
Revolution.
guys on the next
All
video.
right, my man.
Take care. Bye-bye.
Take care.